Good morning, everyone, and welcome to InvestorExpos show for the 26th of March. Today, we are having a great lineup of 4 speakers for you. Michael Valtos, Todd Horwitz, Ray Burchett, and Matthew Buckley. This session will be recorded and sent to your email. Please take a look at your GoToWebinar control panel. Into the questions box, you will be able to ask any questions you want during the speaker's presentation. I would like to begin and bring to the show our first guest, Michael Valtos. Welcome.
All right, everybody. Today I'll be talking about order flow and reversal trading. And I feel it's very important in these times, when markets are very chaotic, to sort of have a way to see what's happening in the market very easily with the order flow. And what I'm going to show you is 2 setups that I like to look for in the order flow. They're not fancy setups. You don't need to draw any lines or do any major calculations, nothing like that. Order flow is basically reading what the market is telling you. And if you stick around to the end, I'm going to give you a copy of my book, if you don't already have it, called Trading Order Flow. It's a digital download, so you'll just have to enter your email to get it. So you're not going to be sent a hard copy cover of the book. But before we begin, a brief disclaimer, please understand that trading is risky. I'm sure everybody understands that by now, the way the markets have sold off quite dramatically in the last month. And, only trade with money you can afford to lose. And those of you that are new to order flow and new to who I am, just a brief description of who I am. My name is Michael Valtos, and I've been in the market since the 1990s. Right? I started on the CME floor as a runner with Dean Witter, and eventually I left the floor when electronic trading started taking off. I joined the upstairs trading desk, and I spent about 3 years total at Dean Witter. Then I left for EDF Man, which is an English trading company, on their global macro desk. After that, I joined Commerzbank, the big German bank, as their Eurex trader. And after that, it was right after 9/11, I left there and took about 6 months off, and just sort of had to find myself again. And I joined Cargill. I was a trading desk manager in Chicago, and eventually I got sent out to Singapore to set up a trading desk there. And after Cargill, I joined JP Morgan, where I spent 8 years as vice president of futures trading. And in 2013, I left JP Morgan, and I just started trading for myself this time. And eventually I started my software company, orderflows.com. So, when I left JP Morgan, I really wanted to have a contribution to the trading world. So I started writing the book, right, Trading Order Flow. And I was trading for my own account. I was using a software from another company, and it was just basic order flow software, telling you the volume traded on the bid, volume traded on the offer. And I wanted more from the software, right? I wanted the software to show me more of what was happening in the market by doing the analysis that I was doing by hand, doing in my head. And I met with the programmer, and I said, what, this is how I analyze the markets, right? Can you put this into the software? So, we started working together, and about 6 months later, we came up with the Order Flows Trader software. And initially, it was just for me. I created it just for my own trading. But then as I showed more and more people, they're saying, hey, can I get a copy of that? And eventually, that's how orderflows.com was born. And the charts that are used in this presentation are generated from my Order Flows Trader, which runs on NinjaTrader 8. Okay, so I work with a lot of traders in the past, and I've always, they show me their charts, and sometimes it just looks like they're throwing noodles at the wall. There's so many lines. It's just like, they'll be like, well, the market reacted off of this price here, then it reacted here, but it's like there's no sense to it because they got lines pretty much, every 5 points. So sooner or later, like even a broken clock is right twice a day, right? You need some structure in your trading, and order flow, gives a lot of traders structure. Now, I prefer to keep trading as simple as possible. I like to look at price and volume over time or over a range. Most traders only look at price. They don't take into account the volume. Now, if you've ever studied economics or you've run a small business, you'll understand the importance of volume, right? When you do your numbers, whether you're making money or losing money, you're going to check how much you're selling at a certain price, right? You just don't say, well, I sell milk at, $2 a gallon. Well, I sell this amount of milk at $2 a gallon. I sell this amount at $1.90. I sell this much at $2.10. You find the area where you can maximize your profits. That's why volume is important, because it helps you understand the current supply and demand situation. Now, most recently, right, we're all familiar with this, right? The whole panic buying of toilet paper. And this is pictures I took myself in the grocery stores over time, because I sort of saw this coronavirus thing coming back in January, because I had my sister-in-law from Asia was here, and she was trying to get her flight back to Asia, back to the Philippines, and she was having a hard time changing it because she didn't want to travel through Shanghai. Then I just sort of noticed, what was happening. People were starting to buy stuff. Well, all of a sudden now demand was hitting the market for toilet paper, right? But the price of toilet paper was consistent, but the demand was outsized. Everyone was buying it. But if everyone is buying, what do you think is going to happen? Well, it's going to eventually, all the volume, the amount of toilet paper is going to be gone if demand, if price is steady, but demand is still there. Now, another good example, right? I have 3 kids. I buy a lot of anti-bac soft soap, okay? And normally I could go to Walmart and buy it for $3.97 for a 50-ounce container, right? And I usually keep, 3 or 4 anyway in the house, because, I'll buy it when there's a coupon in the paper for $1 off. But now you can't even buy it at Walmart. You go to eBay, it's $30, right? So it's the supply and demand. Now personally, I think, these people that are price gouging, should be getting a knock on their door from the authorities. But that's a perfect example of supply and demand, right? And you can see how it applies in the grocery business, but the same thing applies in the markets, right? Markets go up on increased demand. Markets will go down on increased supply. When supply and demand are equal, soft soap is $3.97. When supply is limited but demand is high, soft soap is now $30. But how does this apply to you as a trader, right? If you can spot an area where very aggressive buyers are stepping in at low prices, people coming in buying all the soft soap, people buying all the toilet paper, that's your opportunity to get in and buy, right? Or we haven't seen this in the grocery store, but very aggressive sellers coming in and selling at high prices. But you're seeing it at eBay, not so much on Amazon anymore. People, they got a lot of soft soap, they got a lot of supply, and they're offering it out there at $30. People go, hey, I'll bid $30. They hit those bids. So how can you tell if aggressive traders are especially active? Is you're going to look for imbalances in the market. Now, to look for a market imbalance, you need to look at the volume that's being traded. And this is, we know that the market trades in a two-way auction, right? There's a bid price, there's an offer price. There's a quantity on the bid, there's a quantity on the offer. Okay, so if the market is currently 29.55 and a quarter bid, offered at 55 and a half, size of 72 by 196. For the market to tick up, someone has to buy the 55 and a halves. For the market to start ticking down, someone has to start selling the 55 and a quarters. Once they sell all the 55 and a quarters, the next bid is 55. Once people sell those out, the next bid is 54 and 3/4. Now, once you understand that the markets move in a two-way auction, you have to understand there's 2 types of traders and their activities. And depending on your trading style and order type, you are one or the other. Now, a passive trader is a trader who tries to buy on the bid or sell on the offer. They wait for the market to come to them. Okay, so if you are trading the market, you put a bid in the market, whether it's on the current bid or it's $5 lower, you're considered a passive trader. You're waiting for the market to come to you. If you get filled, great. If you don't, it's not the end of the world. Now, an aggressive trader is someone that doesn't wait for the market to come to them. They trade at the market. They sell into the bid or buy the offer. They do a market order, basically. So they see the market is offered at 55 and 3/4. They buy the 55 and 3/4. They want to get in the market. They want to get in now. And an imbalance occurs when, in the two-way auction, you compare the volume that was traded on the bid versus the volume that was traded on the offer. If the volume traded on the offer is greater than the volume traded on the bid by 4 to 1, again, 4 to 1 is a guideline. Some people use 3 to 1, other people use 10 to 1, but most traders prefer 4 to 1. You would consider that a buying imbalance, and vice versa for a selling imbalance. So if the volume traded on the bid versus the volume traded on the offer is 4 times more volume traded on the bid, meaning you got 4 times as many traders selling at the market, selling into the bid as opposed to buying the offer, then you would have a selling imbalance. You have more aggressive sellers. So how can you see it? Well, some people say, well, I see traders, they like to put up the time and sales window on their screen. And honestly, the way the market moves is it's so fast. You know, this is last night. This is about 8:15, just before 8:15 p.m. And you can see, you know, it's a lot of ones and basically a lot of ones. This is NASDAQ, right? Every trade that was going through is basically a one lot. And if you're trying to, you know, make sense of this, it's imagine during the day, it is moving so fast you can't keep up with it. Now, other traders, they like to look at a dome, okay, the price ladder, and see, you know, the volume traded on the bid, the volume traded on the offer. The problem is the dome moves very fast under normal market conditions. And when I say normal market conditions, you know, I'm talking about, you know, when a VIX is, you know, below 10. You know, if you're watching the NASDAQ dome during the day, you know, you're talking about a market that is, you know, 2-3 points wide, not 2 or 3 ticks, 2 or 3 points. And it's moving so fast up and down, you can't keep track. S&Ps is a little bit more stable. Crude oil is a bit stable. Euro currency is also generally a bit stable. So again, it depends on the market. But to watch a dome, you got to know what to look for. And honestly, you know, trying to interpret the dome or the time in sales, you know, is like you got to be like Rain Man or the guy in Hangover, right? You got to do all these quick calculations in your head. But you know, what I want to show with you, what I want to share with you, is the easier way to watch order flow, and that's called the footprint chart. Okay, and you can see the imbalances on a footprint chart because it'll be highlighted to you, okay, after it happens. You know, you don't have to be trying to catch up with the dome, you know, staring at the dome intently that, you know, if you look away for a split second, you miss something, right? At least the footprint chart keeps it all in a nice, easy to read format. The selling imbalances will be the red numbers inside of a bar. The blue numbers would be a buying imbalance inside the bar. And what you see on a footprint chart is you see the volume at each price level, what was traded on the bid, what was traded on the offer. Now remember, it's a two-way auction, so you're going to compare it diagonally, not horizontally. And you're going to be looking for those areas of the imbalances. The imbalances measure the two-way auction and looking for imbalances between what was traded on the bid versus what was traded on the offer. So, you know, imagine taking all the data you see going through on a time and sales window. You know, if you don't believe me, open up a time and sales window on your trading system and see if you can make heads or tails of it. You know, it's just going to give you a headache. Take a look at the dome, okay? And if you've watched the dome for long enough, you know that if you get up to go grab a drink in the refrigerator, come back, you missed all that information. You know, it's gone, right? You're not going to see it again. But the footprint chart puts it into an easy to read format that allows you to make quick and easy trading decisions. And you're not going to see any of that information on a bar chart. Now, there's a lot of information. You know, a lot of people get scared when they look at an order flows chart the first time because they see a lot of numbers. People are scared of numbers. But believe me, there's nothing to be scared of. In fact, once you understand what the numbers are that you're looking at, it just makes perfect sense. You know, it's a nice addition to everybody's way of trading. So this is an E-mini 1-minute chart, and you know each bar, or sorry, it's a 30-second chart, and you can see the volume traded in each bar. You can see, you know, where there are imbalances, where there's support and resistance, where there's aggressive buyers. You can see the delta, which is the difference between net buyers and sellers in a bar. I'm not going to be talking about that today, but that helps you determine, you know, when there's shifts in supply and demand. Point of control. Each bar has a point of control. It's the volume level, it's the price level with the most volume, and there's going to be times where it acts as support and resistance. And imbalances, right? It's the volume in a bar in the two-way auction. where the volume traded on the bid versus the offer is greater than 4-to-1. Now, when I try to explain order flow to people, the easiest way to describe it is like this. Imagine playing poker, but being able to see the cards of the other players, right? When you're looking at a footprint chart, you're seeing what everybody else in the market has just done in the market. You can see, if people bought at bad prices, if people sold at bad prices, if someone's defending a price area. And that's very important information. If you're looking at a normal bar chart, you're not going to see that information. Okay, so this was yesterday in the E-minis. This is a 30-second bar candlestick chart. I would show a 1-minute chart. People say, why are you looking at 30 seconds and not 1 minute? Well, honestly, the market's so volatile recently that looking at a 1-minute chart is kind of difficult because there's just so much information going through so fast. I just take it down a level. I look at a 30-second chart. But you can see, right, there's 3 potential reversal areas, number 1, number 2, number 3. You got the red candle, anytime the market is going up and you get a red candle, bar closing lower than where it opened, it's a potential reversal. All right, so you got 1, 2, and 3. 1 didn't really work out. I mean, it sold off a little bit. Number 2 just went sideways. Number 3, you had the nice 30-point sell-off. But if you're looking at, 1, 2, and 3, I know some people would sell number 1. I know some people that would sell number 2. I know some people that would sell number 3. But if you're looking at the order flow, you wouldn't sell number 1. You wouldn't sell number 2. You would sell number 3. Okay, and how can you determine that? Is because you're going to be looking at the imbalances in the bar. Are there aggressive sellers coming into the market? So on number 1, this is number 1 on the footprint chart. You don't see any selling imbalances, right? You see no red numbers in the bar. Number 2, you see 1 selling imbalance. Okay, that's good, but that's it, right? But if you look at number 3, you've got 3 selling imbalances, right? And with order flow, 3 is sort of like the magic number that a lot of traders look for in terms of imbalances or stacked imbalances, right? And you can see you got a swing high, right? Just as 2 and 1 were swing highs, but you don't have the aggressive selling coming in. In the bar number 3, right, you've got 1, 2, 3 selling imbalances. Now my software, like I said earlier, right, I created my software to help me see things in the order flow that I might otherwise miss. My software will put a pink box around a bar that has 3 or more selling imbalances for a down candle, a red candle, or 3 or more buying imbalances for a green candle. Now, this differs than your normal stacked imbalance where you have 3 or more buying imbalances stacked neatly on top of each other. That's what this green area is. Or a stacked selling imbalance, which you see here on this red candle in the middle, 3 or more selling imbalances stacked neatly on top of each other. But what I'm saying is when you have 3 or more imbalances in a bar, that is still important, right? And it's important to notice when it happens. If you're just looking for stacked imbalances, you're going to miss the bars that have 3 or more imbalances in them as well. And why is that important? Well, as you can see on the bar, on the high, you've got 3 imbalances. 2 of them are stacked neatly on top of each other. Then there's 1 that's not a selling imbalance. It's 26 against 67. And then you have another selling imbalance. So, it's just 1 price level away from being a stacked selling imbalance. But if you're just looking for stacked imbalances, you're going to miss this. That's why our software will put a box around the square, box around the candle. So, just going back, number 1 has no selling imbalances. Number 2 has 1 selling imbalance, but it's number 3 that has the 3 selling imbalances right there on the top at your swing high. Okay, so going back to your candlestick chart, can you see the imbalances? No, you can't. You don't see imbalances at all if you're just looking at a normal candlestick chart. Now, let's start moving into reversals, right? Simple rules, right? In order to trade a reversal, there needs to be a clear directional move. Sometimes people start looking for reverses when the market hasn't really rallied or sold off. In my opinion, you need a clear directional move, right? And you need you need to have hit a swing high or a swing low, and the market to start turning, right? The market to start trading down off that high or start rallying up off that low. Then you're going to start looking internally into the bar at supply and demand. And how you're going to see that is you're going to see the imbalances. Are people coming into the market to buy off a low or come into the market to sell off that high, right? And so you're going to be looking in the bar for buying imbalances. You're going to be looking for blue numbers inside the bar or red numbers for selling imbalances inside the bar. Now, there's going to be two types of reversals I'm going to discuss now, and they're easy to spot in the order flow. So the first type is aggressive traders coming in at a swing high or swing low. Second type is trap traders, basically when a breakdown or breakout fails. Both are easy to spot simply by looking at imbalances in the order flow. Okay, so for the first type of reversal I'm going to share with you is the aggressive traders coming in at swing highs or swing lows. And there's two criteria I require for this trade. Number one is a clear swing high or clear swing low. Not a bar before or after the swing high or low is made. No, that bar has to be the low, the swing low, and preferably I like it to be the low by, a few price levels, right? So if the previous bar, the low was 7, then our new swing low, the bar is got to be like 5, preferably, or 4 or 3. It's got to be much lower, not much lower, but a little bit lower. And I want to see multiple 3 or more buying imbalances for a buy at a swing low. So I want to see at least at 3 price levels. I want to see aggressive buying appear, right? And for a sell, I want to see multiple selling imbalances coming in after the swing high is made in the bar when you made the swing high. So I want you to see the bar make a swing high, then all of a sudden I want to see sellers attracted to that high and come in and start selling it. I want to start seeing 3 or more selling imbalances in that bar. So I'm going to show you a bunch of different charts. Okay, I'm going to show you E-minis, crude, euro currency, and bunds. Now, so many people trade on so many different types of charts. If I don't cover your chart, I apologize, but there's only so many different ways you could look at the market. So I'm going to show you like E-mini 5,000 volume. I'm going to show you 30-second, 1 minute. Some of the other markets, I'm going to show you 5 minutes and even 15 minutes. People always ask, can I use order flow on a 15-minute chart? So this is an E-mini 5,000 volume chart. And again, this was last night, or the night before rather. And again, it's a 5,000 volume chart. So it's not constricted by time, it's constricted by volume. But what I'm looking for, like I got the arrows here, right? You got your swing low, clear swing low, much lower than the previous bar, but you're seeing buying imbalances coming in here, right? It's got the pink box around the green candle, right? You got 1, 2, 3, 4, 5, 6 imbalances here on this first low, right? And then the next bar straight up, next bar higher, next bar higher. Again, it doesn't look like much, and granted this market's been pretty volatile, but it's essentially a move from around the 24.12 area up into the 24.30 area. Then a little bit later, you made a new low, right? And then what do you have? You've got about 8 buying imbalances coming in after that low is made. And then the next bar goes literally from 04 all the way up to 28. And again, in this type of market, you really want to get in and out as fast as you can, limit your risk. You want to be looking for quick trades, and if the next bar, oftentimes you see these next bars just explode on you in the direction that you want to be, positioned in. So here's a swing high, also a 5,000 volume chart. Again, you hit your swing high, you've got 7 selling imbalances coming in. Market has a nice sell-off, right? Here's a swing low. Market in the next bar didn't go higher than the first bar. It just went sideways for 2 bars. You made a new low by 2 ticks before it exploded again to the upside, about a 30-point move there. Now, people always ask me, where would I put my stop? Normally, I put my stop below the low of the signal bar. And normally, I wait for the next bar to open up and start trading higher before taking a trade. So this one is I wouldn't take the trade because we didn't make that move initially, right? I like the market to start moving in my direction faster. But, if you're one that just, people like to automate things and take every single trade, I prefer to read the order flow because it's going to benefit you over time. If you get long and then the market puts in a red candle and tests the low, that's probably not a good sign. Here you did break the low by 2 ticks before turning around and rallying. But in this market environment, having tight stops sometimes is just going to stop you out. Now, this is not a buy or a sell, okay? And why not? Because this is not a clear, this red bar, right, for getting short, it's not a swing high. Just as this bar for getting long, it's not a swing low, okay? That's the criteria. That's why people will say, well, I'm looking for a reversal, so this red bar is the swing low, and then the next bar starts coming up. Yeah, I see that, but that doesn't meet the criteria, right? If I'm looking for a reversal bar, this is not a reversal bar, right? Just as this other one is not a reversal bar. Instead, it's an inside bar, and you're not even at a swing high in the bar before it. That's why, I hate to say you got to follow the rules, but, the rules are there to qualify what you're looking at in the market. So another example, right? This one, this is a nice swing high, okay? It's high of the day. But what happened? Did the market sell off? No, it just went sideways. Okay. Sometimes the best trading ideas don't work out. It just went sideways. Okay. That happens in trading. This is a nicer one. This is a clear low, even though it's just sort of been going sideways, 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 but you did break and make a nice clear low. Then you got your multiple buying imbalances, and then the next bar rallies, 10 points. Now, excuse me, this is a 30-second chart. Okay, so, I have the arrow here at this swing low, right? You got your buying imbalances, market made a nice rally. Now, people say, Mike, what about this other one here? Okay, it's a double bottom, the first candle down, and then the second candle up. They share the same bottom. For a reversal, I wouldn't at this point really consider that a reversal, even though this one had a nice little move before coming down and sort of testing the bottom again and making the big move. This is borderline, right? The first one here with no arrow, where you have the green bar next to the red bar. But the second one is clear. I like clear trading signals. Now, here's one. It just went sideways again, made a new high by a couple of ticks, and then had the nice sell-off. Again, here you have a double top where it didn't get the sell-off. But, these things happen. Even if you sold this, right, you get stopped out here, you got another signal to get short. Hopefully you could have caught that one. Now, this is a 30-second chart again, right? Clear high, multiple imbalances, 1, 2, 3. A nice sell-off from the 80s down into the 70s over the next several bars. All right, so 1 minute crude chart. Okay, nice clear swing high, multiple selling imbalances at the bottom of the bar. Doesn't look like much, but this is about a 20-cent sell-off in the next bar. Market then just goes sideways on you before it starts drifting down again. So you're seeing it on 30-second chart, 1 minute chart, crude oil chart, E-mini chart, euro currency chart, 1 minute chart. Your new high of the day, multiple selling imbalances, market sells off, about 20 ticks. Euro currency, 5 minute chart this time. Okay, so you're expanding your time horizon. There's your multiple selling imbalances at the high. Market sells off from the 109.20 area down below 108.80. Another 5 minute chart. Again, your clear high, multiple selling imbalances. Next bar, from the 108.95 area, just in the next bar to the 108.75 area, 20 ticks in one bar. Okay, this is also a 5 minute chart. Some of these charts, honestly, they start to look alike because you're seeing the same things happen over and over and over in the market. Here's a 5 minute chart of the euro currency. A sell at the swing high, 108.20, goes down to the 107.80s. And then you got a buy signal over here at the swing low. Again, and the market goes up from the 108 05, 010 area over the next bar in the same bar to the 108.25, and then a couple bars later to new highs. Now, the next chart, people always ask me, hey, can I use order flow on longer term charts? Personally, I don't, but I know some people that do, right? And that's why I'm sharing this method with you of looking for these multiple imbalances. You're not going to see them very often on longer term charts, but this is a crude oil 15-minute chart. You got your nice swing high here, rally up off the low, got a swing high. I had to scrunch it, so you're not seeing the numbers, but I know there's a box around the bar, so I know I got multiple selling imbalances. Market started to sell off. We're trading around 24.90. And then it just goes a little bit sideways, and then boom, you get at 130 you get the big bar that breaks from 24.80 down to 22.80, a $2 move right here. But it was signaled right here in this bar with the multiple selling imbalances. This is a 5-year note. This is a 15-minute chart. This is your low of the day. Coming up off your low of the day, aggressive buyers are coming in. Now, in some of my courses, I talk about reading actually the actual numbers in here. There's something very bullish in this bar with the divergence, with the ratio, with the 0 print, with the 1 print in there. That's also very bullish. But you went from basically your low of the day all the way back up to the highs of the day. Okay, it's a 15-minute chart. So, can you use it on 15-minute charts? Yes, you can. I think that if you're going to watch 15-minute charts, you need to expand, what you're looking at. You can't look at one or two markets because you're not going to get very many signals. Some days you may get no signals on a 15-minute chart. Now this is a Bund, a German Bund 5-minute chart for you guys in Europe. Right, your high of the day, multiple selling imbalances coming in, and you got a nice, 50 tick sell-off here. Again, that's on a 5-minute chart. Another 5-minute chart. From your low of the day, you got your multiple buying imbalances to your high of the day, multiple selling imbalances, and then you sell off from your high of the day. I mean, it appears over and over and over. So we'll Bund a 1-minute chart. Okay, your low of the day, market gradually works higher. It's not a big dramatic rally up, but after a big sharp move down, sometimes the market's going to struggle to put in a rally in, but at least it's going in the right direction. So that is the first one. So hopefully by now you can see how easy it is to spot potential market reversals by looking at the order flow, right? I didn't make any calculations other than seeing what the volume was traded on the bid versus the volume traded on the offer. I didn't have to draw any squiggly lines. If you're not using my software, you just have to look at your chart and see, do I see 3 or more imbalances in the bar? I think my chart is nicer in that it will highlight it to you. I like to keep my charts nice and clean, right? And that's the whole point of trading is with order flow is to keep it clean, right? Understand what's happening in the market and apply that. So the second one that I'll talk about today is the trap traders. Now, what's a trap trader? It's a term you hear a lot of people use nowadays. It's basically someone who's long and wrong, bought at the high of a move, or short in the hole, which is someone who's sold at the low of the move. Basically, when traders get in at bad levels, we've all done that. We've all bought the high of the move. We all sold the low of a move. We all sold the low, and then we cover at the high. Unfortunately, that happens to me sometimes, but that's trading. Now, in order flow analysis, right, when you have 3 or more imbalances stacked on top of each other, that's called a stacked imbalance. Right, I explained that a little earlier. And normally, when you have 3 stacked buying imbalances, they appear in a green up candle, right? Because you have aggressive buying as the market is moving prices up. Conversely, when you see stacked selling imbalances, you see them in red down candles because aggressive sellers are active, okay? So for example, right, as the market's moving down, you see red candles with stacked selling imbalances. You see green candles as the market is starting to go up with stacked buying imbalances. Now, what I want to show you is what happens when the opposite happens, right? When you have stacked selling imbalances in a green up candle, right? When you have stacked buying imbalances in a red down candle. That is a result of trap traders. Traders who are late to the party, so to speak. They get in the market at bad levels. Usually it's because they don't understand the context and market structure, or just plain FOMO, right? Fear of missing out. Oh, the market's rallying, I got to buy. Market's selling off, I got to sell. Or I can't take any more heat on this trade, I got to get out. They buy the high. I can't take any more heat on this long trade. They get out, they sell the low. That happens. And often this happens at market turning points. Why? Is because the last group of aggressive buyers or sellers has come to the market. There's a saying, someone has to buy the high. And, for older generation traders, when there was still, people still read the newspaper, there was a saying, right? I made print. And what that would mean is if you bought the high or the low of the day, that's going to be printed in the newspaper, because the newspaper would show the open, high, low, close prices. So if you bought the high, you'd say, hey, I made the paper, I made the print. That was buying the high or selling the low. So for example, right, here's a market. This is E-minis 1000 tick chart now. Market's going up. You can't really see it on this edge here, but you have a red candle at this swing high. It's like a double top, but you got big buying imbalances. I got another chart here. I'll show you. It's a little clearer. It's the same one, right? You got the big buying imbalances, and then the market sold off, right? A nice 20-point sell-off, right? What's happening here is, again, the market was going up, started to come off. All of a sudden, a big trader or a bunch of little traders came in. I got to buy. Market's going up. I got to buy. Well, what happened is the supply and demand paradigm shifted in this bar. Those guys got long, but at the same time they're getting long, all the big sellers are taking this opportunity to get short at these high prices, and then the market sold off, right? These guys here are trapped. Now, people would have you believe that trap traders are like a big quantity of traders. Often it's a small quantity, but you're going to see it in the imbalances. And that's why looking at the order flow is going to give you an advantage over other traders that are not looking at order flow. So it's a 30-second E-mini chart. 30-second, in this market environment, 30-second versus a 1-minute chart is much better. If you're still looking at a 1-minute chart, I should try and take it down a little bit, because most people can't handle that much heat. Most intraday traders aren't going to, on a 1-minute chart, you're looking at price movements sometimes of, $500. By taking it down on a shorter time frame, at least you're sort of limiting that exposure a bit, and you can get in and out a lot quicker. So here you have a market rallied up, right? You're coming up here, making new highs. All of a sudden, oh, I got to buy, right? And these guys get aggressive. They buy their 150 contracts, but at the same time, they realize that it's time to buy. All the major sellers, all the people with supply are thinking, hey, this is nice high price. I got to start selling. These are the people with soft soap sitting in their basement ready to sell, because price is high. I could sell it now, make a nice profit. What happens? Market sells off over the next 5 bars. And again, a lot of these charts, they look eerily similar because this pattern repeats over and over in the markets, right? Honestly, before all the volatility exploded in the markets, you'd see this mainly on the more volatile markets like DAX, like NASDAQ, even mini Dow, occasionally in crude. But now you're seeing it in E-minis, partly because of the extreme volatility that we've been experiencing the last few months, the last few weeks. Again, market rallies up. People, oh my gosh, I gotta get long. Market's rallying. I don't want to miss this rally. They buy it here. Wrong. Market starts selling off. Boom. Again, another 15, 20-point sell-off on a 30-second chart. It's a 5-minute euro currency chart. Okay. Market is sort of going back and forth. Starts coming down. Oh, we broke our low. A lot of these price action traders, we broke this low. You gotta get short. All of a sudden, so they get short. What happens? At the same time they're getting short, the bigger traders are realizing this is my buying opportunity. People say, well, that's a stop run. No, it's just people getting short at bad prices because they don't understand what's happening in the market. Market makes a nice rally up, right? Even up here, I don't have the arrow, but you got buying imbalances in this red candle, right? Now, normally I would prefer this red candle to be a swing high, but it's still important. I'm still looking at it because it's not what you expect to see, right? What's happening? You made this new high. Market came off a little bit. Next bar opens up. You start trading a little bit higher. Aggressive seller, big passive sellers came in offering it out, but it's met by the aggressive buyers. You got that buying imbalance, but the aggressive buyers ran out the bullets, right? They got no more left to buy, no more power to buy, but the aggressive sellers got a lot of supply. Market sells off. Same thing here. Crude 1 minute chart came down, test this low, boom. Trap traders start going up, more trap traders. Market makes a nice 50-cent rally. And moving on, again, understand context, right? Here you have trap traders, but we're on a move up already, right? You want to see, if you're looking to buy, you know, where people are going to be trapped, it's going to be at lows, right? If you're going to be looking at a swing high, you're not going to be looking for trap buyers, or sorry, trap sellers. You're going to be looking for trap buyers, right? So this is an example of a trade not to take, right? You got to understand market context. Now here's one, you know, 30-second chart. It just went sideways. You know, I can say it failed because honestly, if the trade's not working out after a couple bars, you get out, right? So you could get out at a small loss. You don't have to be married to it. 30-second crude oil chart, again, just sort of went sideways, didn't really sell off, you know, but that's what happens. So don't make trading more complicated than it needs to be, right? You want to get from point A to point B as fast as possible, right? And unfortunately, a lot of people take a lot of sidetracks. So hopefully by now you can see how just using imbalances, right? And there's so many other parts of order flow that you can use, but just imbalances give you amazing trading opportunities, right? You just need to know what to look for, and it does help to have software that has the ability to highlight it to you. So if you're interested in my software, right, the software that we use to generate these charts, go to orderflows.com/oft2.html, and I got a special price, okay? And this is just for this weekend. It's a one-time price of just $675. Normally the software by itself is $899, but I'm also including my order flow trading course as well as my order flow inner circle video series, which is an additional about 50 hours of training. It's about 56 courses in there. And for this weekend until Sunday night, you can be able to get it for just $675. Now there's no additional, you know, indicators like the pulse or the turns. This is for people that really want to get started in order flow and a good footprint chart. So just go to orderflows.com/oft2. Takes you to this page. Just scroll down to the bottom. Here's the button. You can see the price there. You click on the button. It takes you to PayPal, right? I don't get your information, nothing like that. It's processed by PayPal. Now, if you're interested in my book, you can go to orderflows.com/book. You can download it. You just have to enter your name and email and hit submit, right? It'll take you to the digital download page, okay? So, you know, I'm not going to email it to you afterwards. It appears after you enter your email. So go to orderflows.com/book to get my book. If you want to get the software, go to orderflows.com/oft2.html. Now, again, you know, this is a special for new users, right? I know, again, we're in a time of crisis. A lot of people are losing their jobs. I lowered the price specifically for new users. So again, this is just a very limited time. So anybody that's interested, you know, now is the time to get it. You know, we're all on lockdown and you got a lot of time to study the markets. So Anna, thanks for having me. I think I ran out of time for questions, but if anybody's got a question, you know, just send me an email. It's Mike.
Thank you so much, Michael. You can take 2 to 3 minutes to look for any questions that you might miss.
Let me see if I could see anything.
Very generous offer, by the way. Thank you so
Yeah.
much. Love your presence.
Thanks. Well, some of these questions, I don't really have time to get into them right now, because a lot of them is like, can you comment on this market, comment on that market? But I tell you what, if anybody's got any question, I don't want to take anybody else's time, just shoot me an email. It's mike@orderflows.com, and I'll try to get back to you as quickly as possible.
Okay. So anyways, so as I was saying, there ain't no crystal balls in this business. And again, the magic is always inside of you. Okay. You've got to be prepared and ready to do what's right and to be able to work your way through everything. And if you understand all the pitfalls of trading, then you'll have a much better chance to be successful in the long run. And that is exactly what our focus always is to make sure that we're prepared. Okay? So again, what we're going to talk about today is, I call them the next big thing. This is launch ever for the CME, for the Chicago Mercantile Exchange. Okay, bigger than the minis, better than any product they've ever put out are the mini futures, which is what we built some portfolios out because we've been doing portfolios for years. And of course, you'll see all the results, you'll see all the portfolios. But when they came out with these, it opened up the door for many people that maybe either were afraid of trading futures or for whatever reason that you didn't want to trade futures. This is the product. This is where you can get in with very low risk. And I personally believe that this will eventually replace options, okay, as the #1 product trading, because again, in futures market, the bid offer spreads are pure. There is no implied volatility to deal with. So it's a much cleaner price discovery. What we do in our models is, okay, I didn't hear, but okay, the overall view is no opinion, straight math, straight algorithm. And we do have a proprietary algorithm that, again, it's about if you can follow rules, you're going to make money. And that's what it comes down to. So just let me introduce myself real quick. I am Todd Horwitz. I have been a member of the exchanges this is my 40th year being a member. Okay, I've been a floor trader for 30 of those 40 years. And for the last 10, I've been trading off of the screen. Okay, I founded Bubba Trading. I've written 2 books on options, and I've got 1 coming out on futures. I regularly contribute to all, including in Yahoo and Fox and CNBC, of course, and RFD TV. And every recommendation you see, I trade for myself. Okay, again, I don't give recommendations unless I'm willing to trade them. So that's something that I do. Is every trade that you're in, if you're with me, I'm in. Okay, so mechanical trading. Right, the major reason traders lose money in the long run is because they miss trades, let losses run in trades they're in, and take profits far too early and winners. And we've all done that, right? You get troubles, the markets are going the wrong way. You get rid of your strong stuff and you hold the dogs. My method does none of the 3, and therefore our odds of winning are greatly enhanced and proven by real-time performance. We cannot miss a major move in any market. We do not let losses run, and algorithm is designed to do exactly those 3 things. For trend trading, price is the boss. Price tells you everything that you need to know next. Okay, you ignore the news. Okay, news is meaningless. Okay, and I said that earlier when we started. The whole street was banking on a horrible number. It is, listen, 3.2 million jobless claims is pretty bad, but they were expecting 4. So the markets took off and rallied from down 500 to now up about 1,200. Okay, so again, remember that. You buy when you break out of the range, you sell when a trend changes. You don't get out before the trend or direction change. It's that simple, okay? And you got to stick to the model and stick to the system. So when we talk about being successful, we want long-term profitability. We know that anything can happen. Day to day. Okay. Again, I don't worry about day-to-day activity. Chicago time, so 4 a.m. Eastern time for the day, if there is any, in following the trend. So when we talk about algorithmic trading, okay, which is what we do, a lot of things that, again, it comes back down to the math. So today we're going to talk about what are our objectives. It's all about the math, managed futures, our portfolios, how you can take advantage, and I will answer all of your questions. Now, in our system, we've got markets. Again, it doesn't matter. We can trade any market. What we've done is we've designed a number of portfolios that all can fit into different sizes so that everybody's financial position can be set and you can decide where you want to be. You decide the position size, the number of contracts. We give you the entries. We give you the enters, the exits, and we do not use stops. The algorithm will change, and that will give us where our stop is going to be. Okay. And of course, a good friend of mine, Richard Dennis, if you've heard of him, the Turtle Traders, him and I together back in the 80s at the SIBO. And of course, this is a fact of trading. I could trade with the market. And again, that goes back to straight price action. That is exactly what it's about. Price, price, price. That's all it means. Okay. That's all you need to know. Okay. Now, rule-based trading, what it's all about is if you can find, you're going to make money. The professional rule-based trading. They are not cows. They are following a set of rules, a game plan that was built, that they built for themselves, or that they're using some model that goes with it. But the less emotion that you can put in play here, the better off you're going to be in the long run. And again, take it from a floor trader, because we had an old saying on the floor: when you can see a guy's tonsils, you know he's wrong. Give him whatever he wants. And that's always the case, is when people get emotional, they make mistakes. They don't trade well. And I think that's one thing that you have to always remember, is that you cannot get emotional about markets, because again, there's winners, there's losers, but if you're doing the right thing consistently, you will make money over time. Now, the rules you have to follow in this business: to win with algorithmic mechanical trading, you must have no opinions about the markets. Zero, none, nada. Okay. Now I have an opinion because I'm on TV, so I have to give opinions. But when it comes to my trading, no matter what I think, I don't care. It's not going to affect the decision I make based on what the algorithm gives me. If you violate rule number one, you will lose money. A trend is the basis of all profit. If you do not understand this, you should not be trading. You pay attention to the news, you will lose money. If for 1 minute you think you know more than the market, price is too high or too low, the market will take your money. It will always punish traders with such hubris. Okay, now, we've all heard the big stories, right? Oil's going to 100, well, it's $25 now. So again, there's every reason to believe that the markets know, and they will price themselves correctly. We never sell at the top, nor do we buy at the bottom. That is for fools who insist on being right as opposed to making money. Higher, and you are short, you are wrong. You are wrong. And if you are long and the market is going down, you're wrong. Again, it's really that simple. This is a very simple business. Again, if you can go back to the simplicity of following the base rules of the market. Okay? The objective in mechanical trading is to mirror the market. You always want to be doing what it's doing. And if you do, you will put high probabilities on your side. Trade mechanical trading, it gives you a statistical edge you cannot obtain elsewhere. Profitable traders understand that edges are essential to long-term profitability. And again, if you know that there's a mathematical edge, and if you've played any of these games, bridge, gin, backgammon, or poker, the better player is always going to win eventually. They're not going to win every session, but they will grind out their opponent over time, because those games have a statistical probability, just like trading has a statistical probability. Okay. Now, just another from one of my people. From the classes and training to your excellent algorithms, you've been given the tools to be a successful trader. After 40 years of trying and failing, maybe now between your teaching and other technical analysis skills I've acquired along the way, it will work and be able to trade for a living for a few years, and you've made that possible. And again, that's what we do this all the time. So micro and mini futures. Okay, if you know anything about the futures market, these are 1/10 the size of the big futures. So in other words, when you have if you look at a mini S&P, with the tick size is $12.50, the tick size of an S&P micro is $1.25. So it's a product that everybody can participate. It's a product that everybody can trade. It's a product that everybody can benefit by. Okay, again, the overall visions of that noise, that's just some trades going off of my account. Sorry about that. Okay. All right. So what are our objectives? We want to make money. Okay. We want to keep the variance small. We want to be balanced, and we want to keep drawdowns small. They're pretty simple base rules. Okay. And how do we do that? Well, we're going to do it by following the trend, because a good trend following system will keep you in the market until there's evidence that the trend has changed. And again, Richard Dennis proved this by bringing in the turtle traders and hiring people of all backgrounds, all skills, because again, the bottom line is, if you can follow rules, you have put yourself in a position to be successful. If you don't follow rules, you have put yourself on a crash course for failure. Okay. Now, what we look at is we try to break our portfolios so that we have an equal representation, so that at any one time, if one market's going bad, the other ones are picking it up, and there are times when they all go good together, and they never go all bad together because we're getting out, right? We're rotating out. The algorithm is changing, so we're rotating out. So again, it's important to understand what our goals and what our accomplishments are trying to be based on the way markets trade. Okay, and again, these were built from 40 years of trading, all right? And these are very proprietary because again, we've got things in there that adjust for market volatility. If you've seen what's happening recently, and we're always adjusting to the market. Again, it doesn't mean we trade any faster, but again, when markets get faster, and if you can see now, the speed of these markets has been ridiculous. You have to have something that adjusts to that automatically without having to be using, again, going back to human emotion or human opinion. Using a mechanical system is the best way to consistently make money trading. If you know that your system makes money over the long run, it's easier to take the signals and follow the system during periods of losses. If you rely on your own judgment during trading, you may find yourself fearful just when you should be courageous, and courageous when you should be fearful. And again, that is something that you watch over and over again with people. They panic at the bottoms, okay, and they chase the tops. And again, that's not the way to make money in this business. Now, you may or may not have heard of what a family office is. And, family offices are, usually for the very wealthy. Okay, they're usually done in a way where only the very wealthy can benefit. They're in a lot of products, but they don't share their ideas. And what I wanted to do is I wanted to make sure I could bring the opportunity of a family office to the average person on the street who wants to trade, who wants to have a great opportunity to be successful. So what I did is I took my product, okay, which was much bigger, and I made it to a size where anybody can get in if they want to trade. And so it's like our own family office, okay, that you get to be a benefactor of, and you get to participate in this. Because again, we want to make sure that everybody has an equal opportunity in this business to have a chance to make money. Because at the end of the day, it comes down to money, and that's really it. Okay. So are you ready for the next big thing? And of course, if you're a Seinfeld fan, that's gold, Jerry, gold, and we think this is gold. I mean, this is what I use every day. I mean, this is what I've traded from since I came off the floor. Okay, and again, everything we do, everything I teach is always about math. Okay, it has nothing to do with market direction. It has nothing to do with news. It doesn't deal with earnings. It doesn't deal with anything. Okay, it deals with the straight price action of the market, and we are in these markets regularly. We're either long or short. So whatever portfolio you choose, you're always going to be in those X number of positions, long or short. We're never on the sidelines. We are always in 100% of the time. Right? Now, again, our win rate. Why is it important? Because again, it tells you how to adjust your system. Our win rate is 66%. Okay, we hit 66% of our trades. Okay, it's that simple. Okay, and our winners are huge because we're swinging for the fences on every trade. Okay. We don't adjust price during. We don't try to lock in profits during. We stay with that position until the trend changes. If it's a winning trade, then we're going to stay with it as long as it's winning. Okay. But the algorithm will change because what happens is the math of the algorithm does trail up the future or down, depending on which way we're going, and it will take you out when it's time. Okay. And that is something that is very interesting. In fact, this morning, okay, we had one trade today. Okay, we were short the Dow. Okay, the Dow futures. Okay, and we actually had a reversal this morning. Okay, which we bought the Dow down about 500 or 400. Okay, and we bought the Dow down here. Okay, and you can see where we are now. All right, we've like 1,200 or 1,700 points from where we got in. Now again, that's just one of the trades. We're still short some of the other markets. So again, it's not all hay yet, but that's what you're looking to do. Again, you're looking for a model that gives you the directions and gives you the exact trade versus trying to always figure out and play and deal with the emotional side of trading. Amateur traders want to be right. Pro traders want to make money. Okay, I'm here to make money. That's all I care about at the end of the day is I want to make money trading. That's my business. That's what I've done for 40 years. Okay. Since I was 21 years old, this is all I've done. It's the only job I know. Okay. And I was always an independent. In fact, when you watch TV, I am the only independent trader that trades his own money and puts his own skin in the game that's on TV. Okay. Trading is a game of probabilities. You don't have to be right every time. You just have to follow the rules. Okay. Again, we talk about that because the reason we say that is because it's important. Of course, this is from Richard Dennis as well. I always say you could publish the rules in a newspaper and no one would follow them. The key is consistency and discipline. Okay. That goes whether you're trading with me or not. Okay. You got to be consistent. You got to be disciplined. You got to understand how the markets work and how they function. And of course, right now you have to understand the speed of the market. Most of you have never seen a market move this fast, unless you're as old as I am. Okay. I mean, this is incredible. Now I've seen this. This is about the 4th or 5th time I've seen markets like this. I go back to when I was on the floor in 1987. Right. Now, last quote you're going to hear today from John Henry, owner of the Boston Red Sox. I knew I could not predict anything. And that is why we decided to follow trends. And that is why we've been so successful. We simply follow trends. No matter how ridiculous those trends appear to be at the beginning, and no matter how extended or irrational they seem at the end, we follow trends. I don't believe that I am the only person who cannot predict future prices. No one can consistently predict anything, especially investors. Prices, not investors. Again, prices, not investors, predict the future. Despite this, investors hope or believe they can predict the future, or someone else can. A lot of them look to you to predict what the next macroeconomic cycle will be. We rely on the fact that other investors are convinced that they can predict the future, and I believe that's where our profits come from. I believe it's that simple, and we do believe it's that simple. That is what it comes down to. Okay, it is that simple when you look at markets. Okay? Now, profit factor. Now, most people are thrilled with a 2-to-1 profit factor, which all it is the profits divided by the gross losses and what you end up with. Okay, you will see our profit factors live and updated as of some of them Saturday, some of you'll see as of this morning. Okay, so this all was born from what we call our big boy. Okay, this is our big portfolio. Now, this is not, you can use this one, but this is 226,000 to get in. Okay, now again, this is just to give you an idea of what we did and how this all started. So here, this portfolio is in 29 markets all the time. Okay, it's never out. It's either long or short. Okay, and on these you get the entry dates, you get the trade dates, you get the exit, and you get the aggregated wins and losses. But again, we provide this to you every single Saturday. Okay, Saturday morning about 3 a.m. I send out all these reports, win or lose. Again, I don't try to hide from the truth. But here is, so in the 226 at this time, we're in 29 markets. We have 5 losers, 23 winners. Okay, our profit factor is 14. Okay, so for every $1,000, you're making 14,000. Now this goes back. This is the reason I'm showing this. This is the oldest. Okay, this profit's actually up to a 650%, but it doesn't matter. Okay, raw profit. Right? We want you to have 3 times margin. That's how we trade, so that you have enough to withstand a drawdown. Should you start right in the middle of a drawdown, it can be frustrating and gruesome. So you want to make sure that you have enough capital. Okay, so the actual cash required for this portfolio is 86,000. Okay, and that's because margins have gone up because the exchanges are getting a little bit afraid here. So this is what we look for all the time. But again, every morning I will send you a note saying this is a new trade. So some days it'll say none, and some days it'll say reverse Swiss franc from long to short. Okay? Now you do all the trading. I don't touch any of your money. Okay, that's up to you. Okay, but I'm going to show you these portfolios live real quick right now. I'm just going to pull them over here for you. This is real small. That's why I have to separate it when I do it. But this is the 226 as of Saturday. Okay, these were every position that we're in. The ones highlighted in yellow changed on Monday morning. Okay, but you can see the profit factor on was 50.93. Okay, you can see that the raw profit is now 759%. Okay, now again, I show you everything. Okay, this goes back 2 years here. I don't keep the losses out. You get to see losses just like I show you wins. Again, I'm not looking to hide anything. I provide you with an equity curve every Saturday as well. Now I know, looking at this equity curve, okay, that there's going to be a drawdown coming, and as it turns out, we're in a drawdown right now. Okay, but again, I knew it was coming. Why? Because no chart goes parabolic like that without having a pullback. So we knew that it was coming. The only question is when. Right? So here it is. Now again, that's the 226, but the ones you're looking at here with the micros and minis, we start with the 28. Okay, now the 28K, okay, which actually uses about 9,000 worth of money, but we want you to have 28,000 in there. Okay, same thing. We're in 18 markets. Okay, long or short, right? And you can see there was a couple reversals, but again, you get the entry date, okay, the trade price, the last price, and whether or not we're in profit loss. And you can see here, okay, these shaded ones are what we call mega trades, right? They're $500 or more winners. Okay, we actually made in crude, we've made over $12,000 in crude right now. We've been short crude since about 60. Okay, now again, that's the trend. It's not me picking it. This is exactly what we follow. Silver, we made a lot of money. Gold, we made a lot of money. Again, but at the end of the day, this portfolio has been live for just over a year. Okay, and its profit is 146%. But again, I show you everything. Losses, I don't hide or not put in the bad. I put everything in. Again, this chart tells you what there's going to be a drawdown. Okay, again, there's no issue about it. You're going to see one live. All right. Now again, we go down to 5,000. Well, here I'll show you the 17 as well. Okay, just to give you a feel for what we're doing. Now this is a little bit smaller, a little bit less exposure, but again, this trades 15 markets. Okay, again, equity curve is ridiculous. It's going to come back. You're going to see a drawdown. But again, you can see the numbers that we put together the last couple of years. These are based on one lots across the board. Okay, that's what we use. Then we have the baby. Okay, or what we call the 5K. Okay, so this one takes a little bit. This we do about 2-to-1 margin. But again, same things apply. Okay, you can see again. I give you the equity curve with all the information so that you can be ready to go, and so there's never any secrets. Now, here is my portfolio. This is my own portfolio. This first one is February 17th, 2020. Okay, you can see this. I started this portfolio because I've got so many futures accounts with this home. I only put 15,000 to start this one because I didn't need the margin requirement. I already understand it. So this one was at 22,000. Okay, on February 17th, 2020. Then on March 12th, okay, it had gone up to 45,000. Okay. And again, you can see all the markets we're trading. Okay. And then this week, as of this morning, okay, this is as of this morning. Oh, sorry. You can see my name. Okay. As of this morning at 9:40 a.m., right before I came on. Okay. So I'm having a drawdown this week, but yet this account is still up over 200%. Okay. And again, I'm showing you right now, we're in the middle of a drawdown right now. Okay. Again, we're partially on some of the wrong side of these markets, which again, I don't worry about what side I'm on. Okay. All I know is that I got to be ready and I got to trade by the rules and be ready to rock and roll. Okay. So that's exactly what we're doing on a regular basis. Okay. Amazing performance on the management portfolios. I just want to send you a note and say thank you for your continued guidance in all aspects of investing and trading. Your reassuring words every day help me when deciding whether to enter a position or not. Hearing your stress patience has proven to be an invaluable tool. I'm learning more and more from you every day. Your years of wisdom you share with us as a master customer is priceless. And again, just a couple of facts of trading. I contend that no one knows as to why markets do anything, and hence it is impossible to predict the future. Prices with any consistency or accuracy. Those that think they can forecast are fools and will soon find themselves broke. Gurus con gullible traders in believing they have some special knowledge of the future. Unfortunately, 99% of all trading is based on false premises, and that is why very few obtain large wealth from the trading game. You want to make money trading, you simply buy when prices are going up and you sell them when they're going down. It is that simple and basic, but the concept evades most traders because they think they will know more. If they will make more if they know more, I contend just the opposite. You'll make more if you know less and you just follow the rules. So in the meantime, if you want to join me, okay, in my program, love to have you. Okay, we've got a special offer today. Okay, you get the portfolios, you get training at least once a month training, but I do more often. I did a training session yesterday. Okay, typically this is $199 a month. Okay, but today we're doing it $129 for the first 2 months, and then $129 a month after that. So you get 1 month for free. Okay, so I've got room for 50 people. If you want to come, it's BubbaTrading.com/micro. Okay, that's BubbaTrading.com/micro. Or if you want to go for the annual, you get 13 months for the first year. Okay, and it's micro year. BubbaTrading.com/micro year. Okay, and I'll be happy to take any questions that you may have. Okay, and if you want somebody a letter of direction trading, okay, I can refer you to people that cover our product and do what they call letter of direction. So they're trading it for you if you don't want to do it yourself. All right. But again, we've done obviously extremely well and very happy with our model. And we give you the training you need. You get a daily update from me in the morning, and then you also get a text and a market update every day by video, somewhere around noon Eastern time, as I tape one every day for you. Do your members share the rules? Well, I tell you what the rules are specifically, of course. Okay, you just don't get the algorithm. You don't get the raw algorithm. That I would never give up. Okay, that's locked up. There's only one person who knows where to find it if something should happen to me, and that's my son, who will take over if I happen to keel over. Okay, but yeah, no, this is we give you everything that you need to know. Again, it's very basic. Okay, you do your thing, you follow the rules, you enter when I tell you to enter, and you exit when I tell you to exit, and reverse when I tell you to reverse. That's it. It's that simple, and there's no way to make a mistake. Okay, as long as you follow the rules. Okay, that's always the case when you're doing these things, is to follow the rules. Again, I know it's redundant, but I want to make sure that everybody understands that the whole business comes down to whatever you're trading. When I was trading as a floor trader, it came down to following the rules. Okay, so in the meantime, I appreciate everybody. I'm sorry for the audio troubles, and I guess there's not a lot of questions, so I hope you all understand it. Do you manage money, or do you follow your trades? And I trade in my own account. I don't manage anybody's money. Okay, I don't want to touch anybody's money. I give you the trade specifically. I can help you set up. We've got a great relationship with a broker who does all of our trades for us. In fact, my trades, the ones I showed you, are done by that broker. Okay, I let them. It's called letter of direction. Okay, they can only execute the specific trades that I email them in the morning during the day. Right? They have no other power over an account. They can only execute what you have. Again, I don't want to touch anybody's money. I like it just the way it is. I show you the recommendations. If you want to help, I'll tell you where to go trade them at. And if you want to do them yourself, hey, great. Okay. Now we do get some advantages if you're in the bigger portfolios. Like if you like some of the ICE products in our bigger portfolio, we trade some of the soft commodities at the ICE. Any broker that you use is going to charge you $120 a month to get that feed. We get it for free. Okay. So how do you trade? How do you give a trade? Okay. Well, what happens is every morning at 3 a.m., about give or take, I send you out a sheet like this. Okay. And you see this says new trade, or it says none. Okay. So here's a new trade. So this was a reversal on the Swiss franc. And here was, let me see if I can pull it up real quick. I know I'm running short on time because of my audio delays, but we got it. We got through it, and somehow I made it, and I'm glad for that. I'm going to try to pull this up for you right now, if I can, and I'll show you exactly what went out this morning. Okay, at whatchamacallit, at 3 a.m. Chicago time, 4 a.m. Eastern time. Okay, so this was the new trades for the big portfolio. This one direct from you, dog. Okay, I can figure it out. Let's see. So if I do this, okay, so let's see. I'm going to do this. Okay, let me see if I pull this over the whole thing. Okay, so this went out this morning, okay, at 3 o'clock a.m., okay. These are the two trades, okay. This was for the big guys, but again, the Dow Jones affects the micros as well, okay. But I sent this out to both groups. One was the both trades, and one was just a single trade for the mini micros, okay. And of course, so every day at about 3 a.m., you get an email that comes from me and a text saying this is going to be our new trade, okay. And that's how I get it to you. And I also text as well, okay. So that's how I give the trade. I hope that makes sense. Maybe I missed this, but is the trading platform the trading platform, okay, is up to you. You can use Thinkorswim, Ninja, Schwab, any of them, okay, that offer minis and micros, okay. Or if you want to use a broker that I'm recommending, okay, then you can use them. Again, everything you do is totally up to you. I don't want anything to do with your money, okay. I don't want to manage your money. I want to show you how to make money. I want you to use the methods I use because those are the same methods that I use to take this account from 15,000 in November to 40,000 now, and that's after a drawdown this week already. Okay, this is live as of this morning. Okay, so again, and this is one of, you know, I have 5 accounts like this. I have each portfolio represented so that I can show them. Okay, because again, whatever trade I recommend, I'm in. Okay, there is nothing I recommend that I am not in myself. I don't believe in that. I don't believe in making recommendations unless I'm willing to put my money where my mouth is. So again, if you want to join me, it's bubbatrading.com/micro. If you want to join me for annual, it's bubbatrading.com/micro year. All right, so we get special pricing. The first, get 2 months for the price of 1 starting. Okay, it's not a course. If you sign up today, you'll start getting recommendations tomorrow. You'll get the entire portfolio with all the portfolios that you get to look at. Okay, this is what you get on, what time is it? Oh, I got 2 minutes, so cool. This is what you get on Saturday morning. Okay, let me show you what you get Saturday morning. Maybe it'll give you a better handle for what I'm doing. Hold on. I'm a little bit out of kilter here because I was grouped up and running late, but I can figure it out real quick. So here is, let's see. Okay. Well, I'm going to show you the big one because I can't find the micros right now and I don't want to waste time, but here's what you get every Saturday. Okay. You get a full report, okay, of all. First of all, I write something. Here, these were all the new trades for all the portfolios last Saturday. Okay. And some of it was rollovers to the next month. On the bottom, all the portfolios are there and you can click them up. Like I just showed you the different portfolios. So, you know, here's one of the portfolios. That's on the weekly sheet. Okay. So you get to see everything there. Okay. And it tells you specifically exactly what to do. Okay. There is nothing else for you to think about. He's giving things are specific. You're using an algo to call. Yes, only an algo. There is no personal opinion in there. Okay. Again, if there was, I would have never bought gold the other day. Okay. Again, you know, I've been trading for 40 years, so I understand the markets pretty damn well. Okay. But, you know, I bought gold the other day and I hated every minute of it, but it's working fine. But again, at the end of the day, I still hated it. Okay. You know, I bought into this big rally, but it is what it is. And I don't argue. I just trade it. Okay. What would be the required dollar? Oh, well, again, you can start with an account as little as 5,000, okay, which handles about 4 products. And of course, the biggest of the micros we have is 28, which handles 18 products. Now, again, the number I'm quoting you, the actual cash that's being used at any one time is about well, it's a little bit more now because of the raise in the margin. It's about a third, okay, of the numbers. So what we count on is 3 times margin. So a 28K portfolio takes about $9,500 in real money, okay? But we want you to have 28K so that you can understand it. If you do go into a drawdown, you're not going to be getting a margin call, and you'll understand. You'll feel much better about it, okay? If you want to email me at bubbatrading.com, I'll be happy to send you the brokerage I use, okay? You can try out my service for $129 for 2 months, okay? That's pretty cheap, okay? You can certainly try it, $129 for 2 months. If you want to check it out, feel free to do so, okay? And my email is Bubba, B-U-B-B-A, at bubbatrading.com, okay? Is your trading program fall? No. Again, that's the beauty of futures, is there is no FINRA regulations. There's no $25,000 minimum because we don't day trade anyways, but there is no trading restriction in futures, okay? Again, we're not active. We don't want to be active because, again, if we're active, it means we're making adjustments. We're reversing daily. We don't want to reverse. We like it when the markets just stay there. And I'd like to go for a month without giving you a new trade because that means all the trades I have on are winners. Okay. It's Bubba at bubbatrading.com. Okay. And everything is by an algo, and that's all it is. There is no personal opinion at all on these trades. Okay, especially if you ever see me long oil, which I hate anyways. I always like to be short oil, but I was long on the way up, and again, I follow the rules like I'm talking to you about 100%. You can trade it. You can open a $5,000 account, okay, which is using about $2,300 worth of margin. That's the smallest I have. Okay, so but from here it's 5,000 to 28,000. We have a 5, a 16, a 17. Okay, and a 28. And then if you want bigger, I've got the 72 and the 226. You can start small and get comfortable, okay? And then you can move from there. Again, I'm in for everybody being comfortable. I'm interested in everybody being successful. That's what I really care about. I mean, at the end of the day, again, I trade and I teach because I can, and I trade because that's what I love doing. Okay? You can do paper trading if you want, but again, there's no point to it. Again, paper trading is a joke. Okay, you don't feel the real thrill of victory or the agony of defeat when you're paper trading. Okay, I can guarantee you, I can take any system that you have and turn it into a winner paper trading, because you never feel the emotion of what's happening when it's happening. Okay, but if you want to paper trade, hey, that's up to you. I don't recommend it. I think it's ridiculous. How much time in advance? You got hours to handle the recommendations. Hours. Okay, these are not time sensitive recommendations. Okay, again, sometimes you'll get in better than me, sometimes you'll get in worse than me. It doesn't matter. Okay, again, at the end of the day, we're not looking to make 50 bucks on a trade. We're looking to get to those mega trades of 500 to 1,000 or more. So the timing there is no timing here. Okay, when you wake up, if you're in California, I send the trade out at 1 a.m. You don't get up till 8. You put it on then. That's it. You just put the trade on when you get it. That's the beauty of what we do. There is no timing involved there. Sometimes you'll get better. Sometimes you'll get worse. Doesn't matter, because we're in it for the long haul. And hopefully, I mean, last year we were long the NASDAQ 49 weeks out of the 52 weeks last year. We were long NASDAQ futures. So again, we're looking for longer term trades. We hope they go on. I use strictly an algorithm. I never use technical analysis. I mean, technical indicators, because they're, in my opinion, they ain't worth diddly. Okay, that's my opinion. I'm not saying that I'm right. For me, I've never used them ever. Okay, and I've been doing this for 40 years. Okay, I looked at once at a machine that showed me indicator. I never again. Okay, you tell us. I tell you everything: when to buy, when to sell. Okay, how do you set up different price accounts? The broker will set it up. You set it up yourself. Okay, I mean, I run the portfolios. I send you the trades. I give you all the information you need. Okay, and if you have questions, you can email me. Again, I do training at least once a month. I have a training webinar for my portfolio models. Okay, but again, if it gets like I had a couple in the last couple of weeks because of the speed and the way things were happening, because I got people that like the day trade as well. So I just want to make sure I'm always trying to educate. Okay, can you please show your live account? Yeah. There's my live account. Okay, as of this morning, this is done through RJ O'Brien. Okay, that's not the broker I use, but they clear it through RJ O'Brien. Okay, now again, I don't touch this one. This is all auto traded. Okay, for me. Okay, this particular portfolio, and the reason I do that is so that those who auto trade, they see exactly the same fills that I get, because these are all filled at 6:30 a.m. Central Time. Okay. These orders are done at 6:30 a.m. Central Time. Okay, the broker does everything. I don't touch this one at all. I don't use this one. I've got one myself that I play with, which is a little bit of a hybrid. Okay, but again, that's what we do. Okay. How long does it take? Well, it doesn't take any time. I mean, again, a market is a market. Okay, there's no cost for the direction. I mean, the commissions may be 50 cents higher, $1 higher, but this is in most cases. You're concerned about commissions as part of your liquidity. In this model, you're not, because again, we're not making a lot of trades. Okay, so commissions don't even become an issue. Okay, so again, could you get cheaper? Yeah, you can get cheaper if you do it yourself. But you talk about the price of convenience versus anything else, and I think that's where you want to be. And it's not cost prohibitive. Okay, it's not a lot of money, and it may be even less than some of you paying to some of your brokers. Again, I don't know. I've heard all kinds of different rates. So, do you also run overnight? We trade, we hold, we don't sell anything. We hold. Okay, I'm always in these markets. I'm in 365 days a year, either long or short. We don't change. You'll never get a trade during trading hours to make a change. The trades are the trades. You've got them on. That's it. Okay, they change. They will change overnight, and I will send you an update. Okay. So I appreciate you all, and everybody have a great day. I know I'm out of time, so if you need me, Bubba at BubbaTrading.com, and if I can help you in any way, just let me know. Other than that, everybody have a great day. Stay healthy, stay safe, and keep that social distancing. It's a problem.
All right, so welcome everybody. And I want to do a couple of different things. And again, I want to encourage you guys to put questions up in the panel. I will answer them at the end. So the biggest thing I want to do is provide historical perspective for what's going on. I think that's the biggest thing that's missing. If you haven't gone through these situations, I call it the world coming to an end. This is the fourth time for me. First was Black Monday, October 19th, 1987. You know, it's really easy to get swept up and lose perspective. And so that's the biggest thing. I want to give you guys perspective. I want to help you appreciate the incredible opportunity that's being created, and then hopefully motivate you to give a incrementally greater effort to have exponential benefit as we move forward for what's going on. And push this over here. So from a historical perspective, it's really important to understand that in the past, let's go back to 1987, when the market dropped, there was an economic reason for it. In other words, what had happened is Reagan's Economic Recovery Act with tax credits, accelerated depreciation, just ignited the entrepreneurial spirit, and we were rocking. And the powers that be didn't like all the competition that was coming up, so they said, you know, we got to pass a fair tax and cool the jets on these guys that are making the most out of these opportunities. So they had the Fair Tax Act, and that crushed that entrepreneurial explosion. And that's really the biggest reason for the crash in '87. In 2000, Greenspan and the Fed were pumping liquidity into the market over concerns for a Y2K event. And that money just went into the NASDAQ and created a big bubble that burst. And so again, there was a reason for it. Then we had 9/11, terrorist attack, not an economic attack, but we were already in a very weak economic position because of the bubble, trying to regain our footing. So that set that recovery back. And then in 2008, we had the bursting of the housing market bubble. And that was, again, man-made. If you understand the mechanisms, and I'm at a great advantage. I started out life as a CPA, so I understand accounting and tax certainly way more than the average person, plus almost 40 years of participating in the market, so I understand cause and effect. But in 2008, that was the culmination of non-enforcement of income validation and citizenship validation for mortgages. And the way the banks were handling that risk was through mortgage-backed securities, and that was fine and good until Sarbanes-Oxley came along and just absolutely bastardized GAAP and FASB to create this market rule. In other words, they took long-term securities, your house, and turned it into a short-term security, requiring it to be marked to market. And that just really was the biggest downfall. But you won't hear that in the press, but a little interesting matter of fact, they knew it was coming. You had attorney generals from many states coming and explaining the problem to the Bush administration and to people in Congress. They could have modified Sarbanes-Oxley in 2007, 2008. They didn't. And you know when they modified Sarbanes-Oxley? Spring of 2009. So bottom line, what's happening now is disease-based, virus-based. And we have an economy that really was in great shape going into this. We've had had restructuring of our economy over the last 3 years. And I'm going to get into that in a little bit more. But we'll go into great detail. I'm going to help you understand what to look for to confirm that we've bottomed. And then we're going to go through a process to how to really position ourselves to take advantage as we swing back up to the upside. But we've got a lot of great things in place. The good news is, by every indication, we're doing all the right things that we can. Certainly, we wish we were way more prepared. It's hard to believe that, you know, this is over the years that we knew the risk of this. I mean, we saw it with SARS, we saw it with H1N1, and you would think that states would be better prepared, and the CDC would certainly be better prepared, and the World Health Organization would be better prepared, but they all dropped the ball. So the blame thing isn't important now. What's important is what we're doing to get out of this. So what's a bottom going to look like? What are the first signs? Well, we actually started getting it on Tuesday. We had to close above the previous day's high. And if we go back here to February 20th, we see the trigger was a close below the previous day's low. You know, we had been moving higher and higher, and we've been looking not for, you know, a massive sell-off, but certainly a retracement that's necessary to underpin the markets, keep things in balance. But then, you know, we see we didn't get a close above the previous day's high until March 2nd. And then we've got a near-term high now of 31.60, and that's for March 3rd. And we'll understand why that's important in a minute. But we're getting the first signs of firming. Now, please know, despite all the great stuff in place, despite the stimulus package that is working its way through Congress, it's still going to take some time to firm up and work through all of this. And so people can have that trust again to be aggressive in their business activities. And so, and by that, I mean, take intelligent risks. That's what drives sustainable growth. That's what we have to get back to. But we have the first encouraging signs. We've got to close above the previous day's high on Tuesday, and it happened again yesterday. And it looks like we have a chance for that happening again today. So the next thing we look for are close above key retracement levels. So the first key retracement is here, and we got above it yesterday, and I'm going to just check my notes. That was at 24, oh, that was up at 25.73. No, I'm sorry, 25.37, dyslexic. So we tested that, and now we're looking for a close and candle body above there. And then the next thing we'll look for is a close and candle body above 382 retracement back to the contract high at 33.97. That's at 26.37.75. And then the next thing we'll look for is a candle body above 618 back to that March 3rd high. That's at 27.62. And then we'll look for a candle body above 618. And one of the things I spend a lot of time teaching, demonstrating, is how Fibonacci rules when we have high volatility. But these are just some of the things that we're looking for. Another thing we'll look for, this is a Ichimoku Kinko Hoyo. You might know it as the equilibrium cloud. But another thing that we'll look for is a candle body above the top of the cloud. Candle body back above the exponentials, and the 50 moving back above the 100. And the acceleration will be the trailing Shiku moving back above the top of the cloud. But these are things in the future. And we've got to take time to work through, regain a base here for these things to happen. And again, it's not going to happen in a couple of weeks or a couple of days. It's going to happen over, you know, probably 4 to 8 weeks to really start getting comfort for a bottom. And then we can start doing some work moving back to the upside here. So again, there's a process to this. I've gone through it multiple times, but the important thing to remember is we recover faster each time. And why? Just because we have more events compressed into a shorter period of time. That's what accelerating change does. So when you hear people historically talk about, well, You know, then there was this recession, and then it took so much time to recover out of, and this, that, or the other. And it's good to look at history. But when you understand the impact of technology and what that acceleration is, you really begin to appreciate why it's logical for us to get into recovery much faster than in previous events. So as far as upside potential, and you guys should all know this measurement, you just go from the contract high at the time to the low. And I don't know if this is going to remain the low. It would be great if it is, but we don't know yet. We don't know yet. The market will tell us. But if this does remain the low at 21.74, take the difference between the 33.97 half high and that 21.74 low and add it, that takes us up to 46.22. I was doing this webinar on Friday. Actually, my market dropped 3 for my clients. And, you know, well, when? Well, nobody knows when. But I'm going to take you through a process that shares with you my logic, why I think that there's a good chance that we could be well on our way to that by the end of 2022, about 2.5 years from now. And so that is a pretty rapid recovery based on historical things in the past. But again, technology is an incredible accelerator. This was a non-economic event, and we've been restructuring the economy over the last 3 years to put us in the strongest position that we've been in, at least in my lifetime. So let's go to make this a little bit smaller. So let's go to the next slide here. And again, please put your questions in, and I will get to them at the end. So why do we have to go through this bottoming process? Well, everything's dependent upon trust. It takes time to validate that we're at a bottom. It takes time to process the evidence. It takes time to work through that logic. We haven't reacted to a pandemic since the Spanish flu in 1918. I don't think any of us were around that. You know, there may be a few octogenarians that have a great memory, and we could probably learn a boatload from them. But the world moves way faster than it did in 1918. And that's why, you know, we're not going to lose 30 million people or whatever the crazy number was. So we just have to understand, we learn from history, but we have to have a perspective based on current events. But it's still going to take some time to get there. So strategy, again, the trader has to have a strategy. And I've been doing trading and trader development since 1983. And the thing that amazes me most is how few traders really have a strategy, really understand it. And so what validates a strategy is it doesn't change. It adjusts for volatility. In other words, you adjust out your risk parameters, but the strategy stays the same. That's how you know you have a good strategy. You can consistently execute it regardless of market conditions. And so this is a strategy I teach on a 30-minute chart. And those green horizontal lines are my proprietary value level calculation that project the path price expected to follow once the strategy triggers. It really frames the market. And you learn how to do these calculations. In other words, it's not some secret algorithm you become dependent on me on. I teach all of this to you. In other words, I put all my knowledge into you as best as I can so you can do the work, and that's where you get the trust that you need to have the awareness to stay ahead of the market. Okay? And that's the huge thing. If it's the one biggest thing to take away from your time with me, is that trust determines how fast the brain works, period, not technology. trust determines how fast the brain works. So we can have the greatest technology in the world, but if we don't trust it, if we don't trust ourselves, we're always going to be a day late and a dollar short. The only way to have that trust is by doing the work. That lets us get outside of ourselves, have that awareness we need to stay ahead of price movement. So this is from February 20th, pre-volatility, 30-minute chart. This is yesterday, 30-minute chart with volatility. And you see how many more value levels come into play, and it looks crazy. And you're thinking, well, how can, we get through all that noise and trade that? Well, the way we do that, it's the same chart now that's just down on a 1 minute. We can have a 5-minute period today and have as much volatility or more that you'll have in a full day of trading. But the key point I want to make here is the strategy remains the same. We just adjust for volatility. Can go to a smaller time frame. We can open up the value levels. In other words, just the ratios change. The calculation doesn't. There's different factors, but the calculation stays the same. It just gets adjusted. So when we come to the market, and this is how you know you have a good strategy, you're not figuring out what you want to do, why you want to do it, how you're going to do it. You already know. You already know where your strategy is going to allow you to take intelligent risk, what the trigger is, and now you're just waiting for it to happen. And unfortunately, most traders come and look and they're trying to figure out what to do, and they're going back and forth, and then they decide to do something. No, you've got to know what you want to do, why, and how. In other words, the advantage your strategy is giving you, you wait for the market to align with it, then you execute as intended. You're not figuring stuff out. So it's a pretty good measure. And if you find yourself overthinking, analysis paralysis, that simply means you don't trust yourself. You don't understand your strategy well enough. And it's not for lack of effort. When people come to trading, they're already type A's. They're willing to do the work. The frustration comes is that they have a tough time figuring out the work to do, and then they're not rewarded for that work. And so we want to change that. We want you to step back. We want you to see the work you need to do, so you get that tangible understanding for how it's going to take you from point A to point B. And yeah, it's going to take some time. It doesn't happen in a day or a week. I tell people at least 6 to 9 months, maybe 12, depending upon your background of learning and observation. But that will get you to the point where you can make your own decisions. You'll trust yourself. You'll stay ahead of price. And that's what it's all about to be effective. So let's go back to the big picture here. We're on a fiat currency. That means the value of the dollar is dependent upon the policy structure and leadership of the United States. And I can't emphasize that enough. We are not on a gold-backed currency. We are just a make-believe dollar, if you will, based on the policy structure leadership, how much that is trusted of the United States. So at the end of the day, when we have fear and panic like we've had over the last month, we've never had to deal with a pandemic like this. We find out that the World Health Organization wasn't prepared. They're pushing out tests that give a bunch of false positives, creating greater panic. Our own CDC didn't get it right. So what did they do? The administration went to the private sector, the pharmaceuticals, and the labs and said, here, we got to get this right. Get us a test. They got the FDA out of the way. They got a test in 3 days. So they fixed it. They saw that was a huge gap. They fixed it. And then now there's other gaps. There's not enough personal protection equipment, ventilators, all these other things. But they recognize that and they're fixing that. And they're creating systems so hospitals won't get overrun. They, sent the National Guard to create 4 hospitals and 4 medical facilities, total of 8 new facilities or makeshift facilities in New York, moving to fill the gaps. But at least we're seeing the gaps. That's the start to rebuilding trust, right? The gaps are the truth. Either we're going to do the work to fill them or not. That's the truth. We do the work, then we trust ourselves. So it turns out that we're doing a good job at defining the gaps. The World Health Organization, CDC, they screwed the pooch on the test, got it fixed. States aren't prepared as they should be. Again, that's their responsibility, not the federal government. The federal government's coming in to help them as much as they can. So, we put ourselves on a war footing, if you will, for manufacturing what we need to fill these gaps. Created great logistics using Target and CVS and Walmart and Walgreens, their parking lots for drive-through testing, and just all sorts of other mechanisms to get things squared away. So as we see and fill the gaps, what happens? Right? We're doing the work. We trust ourselves. We start looking around and saying, hey, you know what? We're going to be okay. That we can come together. We can overcome a problem. We've got a strong foundation. And once we get through this, once we get people taken care of, once we fill all the gaps, once we have a treatment that is readily available and working for everybody, and there's good indication of options for that, we know they're making progress on a vaccine, but that's not going to help us right now. But we're doing what we need to do to fill the gaps. So that's foundational to my optimism. We understand the problem and we're fixing it. And we have the resources to fix it. So earlier I said that we have restructured our economy over the last 3 years. And going back, that we're a fiat currency dependent upon the trust and policy structure and leadership. Well, that trust is only as strong as the transparency for it. How is policy structure and leadership inspiring intelligent risk? Because it's intelligent risk that drives sustainable growth. When I look over to the right, I'm just looking at the question panel. So there's about 5 big things that we've done, that Congress, this administration has done over the last 3 years. Tax Cut and Job Act. And again, I'm an advantage because my background is a CPA and tax preparer. That was set up for the long game. It is attracting multinationals to domicile in the United States, bring their manufacturing here. That's just one big incentive to bring manufacturing back to the US. The second, regulation clawback, which has led to energy independence. Fair trade, we've seen what's been done with Japan, South Korea, Vietnam, phase 1 with China, Mexico and Canada, the USMCA replacing NAFTA. Huge, huge things when you understand the numbers. What's been improving with border security, there's so many benefits to that. I could talk for an hour. We just don't have the time. What's happened in foreign policy and with our NATO partners, they have been in arrears in their contributions to NATO. They're catching up and they know they've got to stay current with that 2% of GDP. Our other foreign policy is pretty clear. Pulling out of Syria and saying, hey, Turkey and Syria and Russia, you guys got to figure it out. We're not the policemen anymore. And then we see what the Fed had done. They really screwed us, and that's a whole other conversation. If we go back to September and December of 2018, unnecessary rate hikes because inflation was in the target zone of the Fed, but they raised anyway. And then they started cutting this year to make up for it in July and September and October. And then obviously they've cut real hard this month, a half a point and a full point to take us back down to zero. But I don't have the time to get into all of that. But the other real important thing to understand what's happening that this virus is showing us is gaps in our healthcare. Opportunities to fill those gaps, become more efficient in delivery, and to be more cost effective. And even before this was happening, there's a new set of standards and guidelines creating greater transparency for hospitals and care facilities, for procedures and testing and everything else that's going to bring down price and create greater competition, and doing things structurally to break down barriers, create greater competition. That was already in play. The coronavirus is just going to accelerate that. It's also going to accelerate infrastructure spending. That is something that we've been trying to get going for 3 years, and now as far as the stimulus, it's not earmarked in the stimulus, but that will be the next thing, is this infrastructure spending. And there's another big piece here going back to technology, and that's 5G. It's going to be nationally deployed end of this year. It increases 4G internet speed by a 100x. The pipe's 100 times bigger and faster. That's going to power the Internet of Things. Autonomous driving, individual flight, remote surgery, in-home healthcare, and God knows what else. But that is going to explode competition because of all the unique user data points the Internet of Things is going to create. That much more opportunity to bring consumers what they need. So let's run through this breakdown real quick, because the more we understand how it unfolded, the better off we're going to be. So back on February 20th, we were looking for a retracement. We got the close below the previous day's low, gave us a heads up, hey, we're going to get a retracement, we're overdue. Well, then that accelerated. And the biggest down day that week was right around 5%. But the financial press was reporting record point drops in the Dow. And they're right, they were record point drops, but they weren't providing historical perspective. They were talking about it in record point drops, not percentages. Biggest down day, October 19th, 1987, Black Monday, 22.6%. That week, from Wednesday's close to Thursday's open, we dropped another 28%, actually a little bit over. We've had nowhere near that volatility, nowhere near it, not even half of it. Does everybody get that? Probably not, because they haven't offered the historical perspective. Then after that week, Sunday into Monday, Sunday night, oil drops 25% from 40 down to $30. That's a big drop, 25%, that's huge. But what people forget is the multiple that oil was selling at. When it was at $60 and higher, it was 400% of its cost. When it was at $45, it was 300%, $30, 200%. Let me ask you something. If you can make something for $1 and sell it for $2 and have a demanding customer that's right there all the time, you're going to make that trade as much as you can, right? Well, that's oil at $30. 100% profit. Even if it's 50% profit, it's still great, right? But that's what people didn't understand, how manipulated and artificially inflated oil prices were. So that was hard to comprehend. Then week 3, we started finding out just how severe the risks were around this coronavirus. We saw what was happening over in Italy. and then it spiraled. And there was, again, some anomalies as this happened. CDC, WHO, screwing the pooch. And the other big anomaly was the difference between treasuries and gold. In a flight to quality, you'll have the stock market and the indices drop, you'll have the treasuries and gold move together higher. That didn't happen. Treasuries moved higher and gold just kind of stalled. Still had huge volume, but there were sellers to meet the buyers, and then gold started dropping. So what ended up happening, you had about a 33% drop in the Dow. Treasuries gained 21%. Gold dropped 15%. Now, gold has certainly recovered this week because all those sellers early on are gone. And that made me real suspicious. My belief, they were selling gold to attack the market. I've never seen the market punished like this without a logical understanding. I mean, we knew the Fed was going to step in. We knew there would be stimulus. It's just historically, it's always happened. So, you know, those are the other things that have played out. Now we know that stimulus package is $2 trillion. We've got pandemic management in place. And so what does this look like going forward? Well, again, we've got that great foundation that's been built through economic restructuring. Citizens are being responsible. Things are orderly. People are staying at home. They're understanding what has to be done. It's playing itself out. Fed and Congress have stepped up. They're doing their job. And again, 4 to 8 weeks, I believe it's going to take for us to have the confidence to start hitting on all cylinders again. And just so you understand this stimulus package, again, I've got the benefit of CPA and tax and understanding these efforts from a historical perspective. Big part of the stimulus package, and this is huge, about 500 billion of it is for small business, 500 employees or less. That represents about 50% of the workforce. And so what that basically says is, hey, Ray, we're going to lend you or give you a 250% grant of your monthly payroll. And as long as you spend this grant on payroll and on rent, utilities, you're not going to have to repay it. So that means if I have a payroll of $100,000 a month, I can get a grant for 250. That's literally going to let me cover my employees for 2 months in their payroll, and then I have 50,000 on top of that for cash flow. Does everybody follow me here? That is what's happening. So small business entrepreneurs stay in business, their employees keep getting paid. Then you have the one-time payments, $1,200 to an individual, $2,400 to a married couple, just as long as their household income doesn't exceed $150,000, and then $500 a kid. So a family of four, $3,400, that's going out direct deposit. So people are keeping their jobs and they're going to get a $3,400 cash infusion, a family of four, $150,000 or less income. What's happening with the big companies? Plenty of cash is made available. It can't go towards stock buyback. It can't go towards executive bonuses like it did in 2008. And then the Fed is stepping up to backstop all of that. So I want you to think about all of this is pulling back a slingshot on the rubber band, or I should say the rubber band on a slingshot. We've got the economic restructuring. We have this massive stimulus in place that's worked through. Now it's going to get out there. We're solving the problem. We know a bunch of stuff that treats it. We see these gaps that we need to fill. It's going to accelerate restructuring of healthcare. It's going to accelerate border security. It's going to accelerate infrastructure. And then we have 5G and all of that it's create with that big pipe for the Internet of Things. So we got this incredible rubber band coming back. Now, in the late 90s, we had what I call the first acceleration. Internet, PC, and cellular networks came together, forced us all into the digital age. I'm sure many of you went through that and remembered what you had to do to adjust. But please keep in mind, it was those that gave an incrementally greater effort that had exponential rewards. Incrementally greater effort, not a whole lot, just a little more, but exponential rewards. That's what happened in the late 90s. And then in 2000, when 4G increased internet speed and capacity 100x, or I should say 10x, social media blew up. Again, the ones that understood it incrementally better, exponential gain. Now we have this opportunity. And those that understand how to prepare, why we're going to recover, and then develop the skills to take advantage of this opportunity, it's going to take effort. We can't just play follow the leader. There's no trust when we play follow the leader because we're not learning. We're just doing what somebody is telling us. We're dependent on their knowledge. It's not ours. When that knowledge becomes ours, then we're much more aware. We're staying ahead of price. We're not being told what to do. So that's what we need to do. We've got to prepare to know the truth. We've got to develop the ability to make our own decisions. We've got to see the gaps in ourselves. And then we're going to be in the position we need to make good decisions, stay ahead, have exponential benefit. So we've gone through, we understand the circumstances, creating and supporting the opportunity that's coming. And we just have to neutralize fear. The messaging that's coming at us out of it that's engineered to make us panic. And we got to say, okay, we'll never know anything. And as change accelerates, there's always going to be more gaps to fill. You know, 5G, 100x increased internet speed, variables and risks for gaps are going to increase proportionately. Guess what? Coronavirus or no coronavirus, we all have to get way better at seeing and filling gaps to remain competitive. Accelerating change demands it. And again, you work with me, give that incrementally greater effort, you're going to be prepared and have exponential gain. But you got to have a credible plan. You got to understand what you need to do, why, and how it's going to work out for you. And then you got to do the work. I tell folks all the time, it's not what I say, it's what you do. Again, most people want to do the work. They're frustrated because they're not doing the right work and they're not getting the rewards. And once we see that we're doing the right work, everything changes. So for futures trading, we got to understand it's no different than any other profession. We have to put in the time and effort, have guidance, support. And what's the work? We've got to have an effective strategy giving us an advantage in the market. To do that, we have to know how to quantify and qualify. We have to be good at technical momentum, the energy driving the market. We have to know how to read the dome, read the tape to fine-tune entry and exit. It takes time to do all that. We understand as we learn all of those things, we have to go through an observation validation cycle, observing them in practical application and our own ability to do that. So all of that's got to be part of your trader development plan. And that's what I provide through advanced training. So I'd like you to write this down, trust1st.com. I'm doing a live training Saturday, this Saturday from 9 to 4 p.m. It'll be recorded, but you can go to Trust First, and this is my website. Click on Store and Sign In. This is trustfirst.com. Click on Store and Sign In. I apologize, this is running a little slow. But there's my Store and Sign In. You can see everything, but click on Advanced Training. And this will give you all the details for advanced training. And you can read the reviews. But it's $497. And not only do you get the live training on Saturday, and it'll be recorded if you have conflict and you'll replay it, but you also get the on-demand learning modules. And advanced training teaches you this strategy, teaches you how to calculate the value levels, how to do market analysis, how to have great sensitivity for the energy driving price movement, how to adjust for volatility, and how to read the dome. So everything that I've gone through, you'll learn. So the other great components of advanced training, not only the instruction, but it's the comprehensive development support. Every evening I send out a chart book. It covers ES, oil, gold, and the 10-year note as teaching examples for this strategy. Reinforces all the qualitative and quantitative work. Every morning at 6 a.m. I do the daily briefing. We go through and review all the analyticals, where the strategy's at. Then we brief on the fundamentals with the potential to impact price. And that's recorded. So I do it at 6 a.m. live. It's usually up, the recording available between 7:15 and 7:45, just depending on how long the briefing lasts. Then on Sunday night, 7:30 p.m. Central. Again, it's recorded if you can't make it. But we look back at the week, take a review of the strategy, deeper dive on things, and then we look forward. Usually not a lot going on Sundays, so we have a lot more time for Q&A. But I'm with my clients 6 out of 7 days a week, live every weekday from 6 to 6:30, then Sunday night from 7:30 to about 8:15, however long we go. Plus you get my chart book every evening. Plus you have on-demand access to the learning modules broken out into 9 modules. Plus you get to come to the live training Saturday, and you'll also have a recording of that. So I'm hoping you'll give incremental greater effort to have exponential benefit as we move into this great opportunity that's been prepared, and this foundation of economic restructuring and the stimulus and everything else that's going to be in place to make this happen. So I'm going to go over here to the questions real quick. We got about a minute left here, and we'll move up. I'm going to turn off the camera here while I'm leaning over to read. ESM, that's ES March is the chart. HV is a pandemic. Asian flu in 57 was a pandemic. Only certain things are death. Right, just saying that you're going to have these things happen. We should have been better prepared. And just some comments about the World Health Organization. Bunch of thank yous. Do my algos run overnight, or are they set up for intraday only? My strategy, and the algo is the proprietary value level calculation. It just projects the path price is expected to follow. Here's the thing. I don't tell anybody when to trade or what to trade, because I don't know the risk tolerance. What this strategy does is it operates across a broad spectrum of risk, can be applied to any actively traded futures contract or stock. So I teach you how to do those things. And because it operates across a broad spectrum of risk, can be applied to any actively traded futures contract or stock, you'll find your own sweet zone, sweet spot and comfort zone. And if you like to trade overnight, you can certainly use it to trade overnight. How long does it take? I tell people give themselves a minimum of 6 months. Some people will be sooner, but it's basically 3 to 6 months to learn And then at that 6-month mark, you can begin sim trading. You'll have good knowledge. You won't be building bad habits. And usually that 9 to 12 month space, people are ready to start trading live. Most people just get crushed by human nature. They want the reward without doing the work. The important thing to understand is that this foundation is going to be in place for a long time. Give yourself 6 to 9 months to prepare, and you're going to be set up for a future you can't imagine, but you've got to do the work. Again, it's not what I say, it's what I do. I teach. That's why I'm with my clients in the briefing every morning, the chart book every night, Sunday evening review, and you have on-demand access to the learning modules. You can email me at any time. And so come Saturday, get started. This is a great deal.
All right, folks, good afternoon. Everybody give me a thumbs up that you can hear me. And I guess if you want to see me, I guess I can turn on my video and show you how ugly I am. Let's go ahead and get airborne. Got 45 minutes from right now. Have a lot to cover. This is just, I've never seen anything like this in my entire life. I've been trading for about 28 years next month, and this is absolute insanity. It's insane, and especially the market activity over the past couple days, it makes it even more insane. So I'm going to make a couple shocking, well, they're not shocking to me. They're going to be probably shocking to a lot of you, but the United States government's lying to you, folks. Actually, and I could say this guy has been lying to you, as well as most of the members of Congress and the Senate, to the point where they actually last week, 4 of them got busted dumping shares in the market because they knew how bad it was going to get, while they came out the microphones and told you that everything was super fine, fun time, fantastic. Absolute disgrace what's happened. So I'm going to I'm gonna lay it on, man. We called the top, period. There is a screenshot of January 22nd. We were in an accelerated retirement brief. Saw Donald Trump sitting in Davos with all the beautiful people. It was a CNBC interview. Joe Kernan said, "Hey, Mr. President, there's this like virus in China, and you know, blah blah blah." Trump was like, he was pissed. He's like, "Why'd you even ask me that? I trust Xi. I trust the numbers. I trust everything. Not even a threat. No threat at all. Nobody does no threats at all better than me. Believe me, huge." I turned to my camera and my traders and I said, "Get out now. Buy puts on the S&P 500 and get long volatility." Since that call, we've made close to 50 millionaires at Top Gun Options. Nailed it. How? I knew he was lying, and I'll tell you why. And how? Over 28 years of trading, 15 years of flying fighter jets for the United States Navy, 15 years on Wall Street. This phone right here is worth $1 billion. All the contacts that I have in here, man, has been epic for the past 2 months. I call it the Fred Sanford. For years, I said, you know what? After the bailout of 2008, when the Fed jumped in to save Wall Street and interfere in capitalism, I said the next time something bad happens and the Fed jumps in with both feet and the market ignores it, that will be the end of the market. We will see an absolute implosion. I call it the Fred Sanford, right? I'm old enough to have grown up watching. I love the Fred Sanford show. Once an episode, man, I'm having a heart attack. You know, Lamont, you big dummy. You know, this is the big one. I'm coming, Elizabeth. This is the big one. So as hedge funds, institutions, Ronin Capital in Chicago, mortgage companies are all going out of business, how did we do in the past 2 months since I made that call? The weekly options model portfolio is up over $409,000. Each one of these portfolios you will see was based on an initial starting account on January 1st of $100,000. And guess what? We were only using in some of these portfolios maybe about 50% of that. I think the most we had deployed at one time in one of the portfolios was 50 grand. I think in the solo Amazon service, we had maybe 25 grand at risk. Okay. So weekly options, solo Amazon, $136,000. Our primary live trade brief, $491,000. This is the retirement portfolio. Accelerated retirement portfolio, the one that I was in live when I watched Trump. I'll answer how I know he was lying, folks, in a couple minutes. I called it. I'll show you my YouTube page. Once you become a member, you can go watch all my old briefs, folks. On the way down, I called every one of it. I got buddies in the Pentagon. I have buddies on the Hill. I knew that the senators and the President of the United States was lying to you. I'll tell, well, and let me keep going here, man, and I'll explain it. Weekly debrief portfolio, $149,000. That's $2.13 million in positions that I covered live in our live trade briefs. Check out how the only other guy who I've seen in 2 months who was I think he was about 3 weeks after me, Bill Ackman, $2.5 billion on this thing. Well, I'm not swinging around Bill Ackman's. Maybe I should be, but we did $2.1 million in trades that were covered live in our briefs. Limited risk, folks. This isn't. Did you risk 20 million to get? No, man. I'll show you my SOP and our trades. Men lie, numbers don't. We just did a weekly debrief this morning. We're having an absolute blast, but I'm going to tell you in a couple minutes what you should start and stop doing. The first thing you should do, let me give you the bottom line up front, is to stop trading. I'm going to let that sink in. What? I'm here to learn about trading, and the guys tell, yeah, if you do not know what you're doing right now, you need to push back from the table, go play with the dog, go for a walk with the kids if you're allowed to. Do not trade right now. I have a couple losing trades this week. I'm like, I got buddies at Boeing. I know a lot of, I flew a Boeing airplane for 15 years, almost 3,000 hours in a Boeing fighter jet. Got a lot of buddies there. They're like, dude, we're probably chapter 11 in a couple days. Got bearish on Boeing. Got blown out this week. Momentum trading. If you don't know what you're doing, you're going to get blown out at this point. And I'm going to tell you what I think's going to happen, coming from the only other guy who predicted this to the day. Don't get in this market right now. Use this time to get smart and sit on your hands. The fact that the Dow Industrials went up 1,200 points, over 3.2 million people being out of work, and that's a lie. There was many states' unemployment websites were crashed. I'm hearing 7 to 10 million from the guys I talk to, which are allegedly smart money. I'm going to tell you this, folks. This is absolute insanity. And when the market gets distanced that far off from reality, I push back and I'm going to go, play with the kids. It makes no sense. And I'm going to tell you what I think is going to happen, what we can potentially do, and all sorts of stuff. But I'm telling you that for your own safety. Anybody coming on here today telling you what to do or this is great, I will tell you that this will be and I hate guys who say this stuff. I don't think I've ever said this in my life, and I almost want to punch me in the face. This will be the biggest buying opportunity of a lifetime. That's true, but it ain't anytime soon. Trust me. I am talking to, you wouldn't even believe the horror that's out there that's going to come. We, ladies and gentlemen, are sitting in a recession right now. It was a shock recession. And I am predicting, and you can write down the date and time, this will be another career call. We are heading into a depression. Easily. My promise, I'm going to give you an up-to-date intelligence brief, literally up-to-date. Been on the phone, been on webinars. Like I said, buddies in the Pentagon, Wall Street, on the Hill. Was up at 5 in this morning. I got buddies at Macquarie in Hong Kong, Tokyo. Man, I've been burning the midnight oil on this stuff. So I'm going to give you an up-to-date intelligence brief. And I pull no punches, folks. Respectful truth over artificial harmony. I'm going to show you what we've done targeting for max profit and why I'm sitting on my hands a little bit. I mean, I just put on a bear call spread with my private trading group about 10 minutes ago, a bear call spread out due tomorrow for 19 cents, got filled. It's down at 14 cents right now. Nice $4,000 or whatever in a couple minutes. And how to turn people's panic into profit, right? Panic into profit. That's what we did. A lot of people, unfortunately, folks, got a rude lesson, right? The rally in the fall, the FOMO rally, fear of missing out. Can somebody tell me another reason why the S&P 500 has been on a tear for the past 2 years? You don't have to chat, waste time. I'll answer it. This is a rhetorical question. Who was the #1 buyer of the S&P 500 for the past 2 years? No, it's not the Fed. No, it's not China. The #1 buyer of the S&P 500 for the past 2 years was the S&P 500. It's called share buybacks, folks. Donald Trump, even though he's regretting it now, enabled that share buybacks with all of his tax stuff. Hey, Apple, I know you have $1 billion sitting in Ireland right now. Why don't you repatriate that cash and make American jobs? Yeah, okay. Cash back, bought back all my shares. So, ladies and gentlemen, these airlines and a bunch of other companies, I haven't read the full text, obviously. I'm talking to buddies about it. They're not going to be allowed to buy back their shares, at least for a year. So one of the major drivers of our bull market, being able to eat your own tail, ends for a lot of these companies that are going to take government money. Here's another black swan. Another black swan today and going on is oil. I have a buddy at GSAM in London, Goldman Sachs, he's the head, he is a commodity trader. Not going to say who it is. Wiz, we're talking $10 oil. I thought the president said low oil prices is like a tax cut for America. Folks, first of all, low oil doesn't necessarily equal low gasoline prices. That's not linear. Sometimes it is, sometimes it isn't. There's a lot of stuff in there. But listen to me, your $10 that you might save at the pump every other week, which you're not filling up right now because you're supposed to be at home, guess what? Your little $10 in savings isn't going to offset the hundreds of thousands of jobs from Schlumberger, Occidental, Apache. They're laying off hundreds of thousands of people. When oil goes down, folks, it's not good for the economy. Only a fool believes that. Plus, you don't take that $10 you saved at the pump and run inside and buy Slim Jims and Yoo-hoo chocolate milk. You don't. But the guy who lives in Midland, Texas, working for Schlumberger, who makes $100,000 a year, who just lost his job, ain't paying his rent, didn't go to the diner this morning, it isn't going to put a drop in it. So we have several black swan events going on right now. A pandemic. My God, man, who saw this coming? I didn't until December when the president was briefed as well. And I'm going to tell you all of this. It's going to shock you, or maybe it won't. Good afternoon, ladies and gentlemen. My name is Matthew Buckley. My call sign is Wiz. Fairly certain my parents love me. They didn't name me that. I earned that flying the F-18 Hornet for the United States Navy for 15 years. I graduated from the Navy Fighter Weapons School, which many of you know is Top Gun, where I was an adversary pilot. I was a good bad guy and also flew 44 combat sorties over Iraq. How'd I get into finance? Grew up in New Jersey, South Philly, New Jersey, one of 6 Irish Catholic kids, lower middle class family. Was always taught service above self. Grew up on the beach, loved airplanes, wanted to serve my country. That's a Reese's Peanut Butter Cup for naval aviation. Always wanted to be a Navy fighter pilot. I did it. But as I was growing up, my dad would, on the back of the Wall Street Journal, the stock prices, and hey, Matthew, if you go buy a Happy Meal today and you own stock in McDonald's, you might make money as an investor. Always was fascinating to me. So as I was learning to be a Navy fighter pilot, I was kind of trading on the side or learning to invest. And I figured out at the end of the day that trading is a form of combat. Somebody's going to win and somebody ain't in my world. And in my world, you didn't get to go home that night. Trading, oh, geez, I lost some money. But I started to apply all of the methodologies. Having a strategy, implementing tactics, contingency planning, knowing when to get out of something before it got worse, or knowing when to get out of it when it was good, not being emotional, staying disciplined, managing risk. Does any of this sound familiar? It should, because if you're not trading like this, you're going to get shot down, period, especially in this type of market. Top Gun options. Why Top Gun options? Similar to a tragedy as to what we're going through right now as a country. This is how I started Top Gun options. Early in the morning of September 11th, 2001, I was scheduled for my first flight as an airline pilot for American Airlines. I was living in Dallas, Fort Worth because I was flying the F-18 for the United States Navy Reserve. I got off active duty, 10 years of flying the Hornet, lucky enough to win the lottery. Dude, come fly F-18s for the reserves on the weekends. And during the week, be a rich airline pilot. I was on top of it didn't get any better. That year, we had 28 guys apply for 2 slots at that squadron. There was 13 guys that tried to be a Blue Angel that year. Everybody was leaving to go be a rich airline pilot and fly Hornets part-time. Literally packing for my trip. In this office is my American Airlines uniform still in the plastic as a reminder to me of what happened that day. Sitting right there. My wife came in and said, you better come out and take a look at the TV. Somebody flew an airplane in the World Trade Center. And what did I say? I said, hey man, packing. She's like, you better come look. I'm like, whatever. I went out, never forget the look on her face. Because I'm like, okay, it's a beautiful day in New York City, big smoking hole. And as I was standing there going through my aviation checklist of how that could have happened, boom, second plane hit, knew we were under attack, and I raced out to Naval Air Station Fort Worth. I briefed with the F-16 guys next door, and me and another squadron mate of mine sat combat air patrol that day. I went from potentially flying in an airliner that day to shooting one down, to maybe even shooting down a squadron mate. Most of the guys in my reserve squadron were airborne that day. It was insane. Why am I telling you about this? You ready for this? Because when I got hired by American Airlines, I got a letter from the chief pilot, color stationery, signed in ink from him. October 1st, 2001, dear crew member, on a photocopied letter that was like off-centered. You're furloughed. I lost my job in the blink of an eye on September 11th. That's coming, folks, to millions of Americans, to a lot of people in the airline industry. You know what I did? After I got done feeling sorry for myself because 3,000 Americans were dead, I said, hey, man, time to get serious. Let's go. So I focused on my trading, and the returns went through the roof. I popped up on the radar of one of the largest options trading firms in the world, headquartered right there in the Board of Trade. These beautiful, that was the firm right there, man. That's the intersection of Jackson and LaSalle. That's the Chicago Board of Trade. I had an absolute blast. Time of my life, man. I helped build a hedge fund when I was there. I helped build the retail brokerage options house. And I like to jokingly tell people I felt like Eddie Murphy in Trading Places, going from little old, retail trader on the sidewalk to, the corner office of a multi-billion-dollar trading firm, folks. Managing director of strategy, started my own kind of CNBC for options. And then I'm like, you know what? No offense to everybody in Chicago. I'm a beach guy. I'm a boat guy. And 3 months out of the year, you can only go outside in Chicago. So I moved down here to Boca Raton 10 years ago and started Top Gun Options to empower people like you to trade options. It ain't rocket surgery, folks. I'm a knuckle-dragging political science major from New Jersey, former pilot. This is not hard, but if you don't know what you're doing, you're going to get wiped out. Who was it? Sans Iwo Jima, John Wayne, or whoever it was. Life's tough. It's even tougher if you're stupid. So I'm going to tell you right now, folks, the easy initial money has been made. What do I mean by that? That was easy. I just showed you how easy it was. There's January 22nd where I reported. I said, get out. That's the Donald Trump Davos interview. I'm actually writing a book right now. I'm having a ghostwriter go through all my live trade briefs and write a book about what happened because we nailed it. And every one of these on the way down, one of these little rallies, what did I tell my members? Sell into it. Sell the rip, don't buy the dip. Epic. Now, I don't care about this anymore. Why? It's over. Namaste, be present. Guess what? That's done. We're sitting on massive amounts here. So here's how I think this is going to go. Implosion. And we're going to see what we've been seeing. We're going to see a bunch of W's here, folks. And then there's going to be a decision. What is it? Right here. I don't know how far out in the future. We're either, and I jokingly tell people at Top Gun Options, I wear 2 suits. I wear a flight suit, and I'll tell you how I feel as an American, and God bless America. Then I'm going to hop into a $10,000 Armani suit like Gordon Gekko and tell you exactly. And it may not be pleasant, but it's about the money. We're going to get to a point, maybe, and I hate using this word, but you're going to hear it, COVID fatigue. Is the bad news already so baked into this market that we do this? Or are we not even braced for about what's yet to come? Easy money's been made. This is going to be work. I'm working my rear end off trying to helping my members. This will be the next round of easy money, and so will that. Why do I tell you all of this? Because right now, unless you're willing to sit here for 12 hours a day, you don't do this. I just put out a video to everybody on my feed. I'm like, push away from the table and don't do this. If you're not trading with money you can afford to lose, it's irrational, folks. I feel like Spock. The highest unemployment claims ever in the history of this republic. And people are buying stocks right now? No, they're not. This is trading. I'm on an hour-long institutional call from 9 to 10 every morning with billion-dollar hedge fund managers, large family offices, and some institutional guys. Nobody's buying stocks here, despite what they say on CNBC. Has anybody seen the Oracle of Omaha? 9/11, the financial crisis. Moses came out with his in Omaha and said, I think it's all past. I'm investing in America. That dude knows the worst is yet to come. So do we get COVID fatigue? Look at this new report that was just released. I didn't even get to read the whole thing. American deaths are going to top 80,000 in months. So does the market kind of go, la, 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 I'm not listening to you, I'm not listening to reality? Or does it in a week or two wake up? When's the week or two? What's going to happen next Tuesday, Wednesday, on April 1st? Did you see what the Cheesecake Factory already came? Look at these numbers. Cheesecake Factory today. The company Cheesecake Factory, like the big one, we're not going to pay rent. Tremendous financial blow. 47,000 stores have closed across the United States, as virtually every retail is going to stop paying rent. A lot of people were calling me Paul Revere. They're like, dude, you nailed it. You nailed that to the day, and you nailed this implosion within 2 days. Damn, I missed it. I'm going to tell you right now that anybody who tells you that where the bottom is, take your money and run in the exact opposite direction. I'm going to tell you that have no idea where the bottom is. Right here, I said we have another 10 to 20% to go down. You're nuts. You're trying to panic and fear people. 10%. I am telling my members that I actually want to miss out on some of the upside to get confirmation. Why? Because if I missed getting in here and I get in here, oh my God, so I only make 20 million instead of 30. Really? But I'm giving you a public safety warning right now, folks. If you do not know what you're doing, don't be doing this. I just told all my new members, we have no more. We've closed our trials and our monthly memberships. I'll tell you at the end if you want to do a quarterly or an annual. We have too many people. Our live trade briefs are packed, and I don't want the quality of what we do to suffer. I told all those people we have 8 full throttle training sessions, from this is the market to this is an iron condor. They need to sit in their homes and watch those training sessions. Watch them 3 times. You'll pick up something new each time. And we have manuals, primary, intermediate, advanced. If I didn't know what I was doing, I'd be burying my face and getting smart on how to do stuff to be getting ready for COVID fatigue and market rally or the next leg down. Let me just ripple through. I want to keep them on time. I'm going to ripple through what I think. Which one, Wiz? Okay, you nailed that. You're the Oracle of Boca. What do you think is going to happen? Bill Ackman last week on CNBC, or was it 2 weeks ago? He was telling the truth. That you can put that on somebody's tombstone as a turning moment in this. The man was right. He's like, hell is coming. Are we so arrogant as a country to not think what happened in Wuhan, in China, South Korea, Japan, France, Italy? We're America. That ain't going to happen here. Folks, Sunday afternoon, we've been in our house locked down. I'm like, I got to go for a run. Running towards the beach. If there was a person on my side of the road, I went to the other side. Here comes a bike. I'm going on the other side of the street. I get to the bridge over the Intercoastal. I look in Lake Boca, which is the Intercoastal. It was packed. 18, 19 boats tied up to each other, each boat packed full of people. The music blasting. I'm like, Oh my God. Do you all not understand that the quote 15 days to get rid of this doesn't start until everybody isn't doing that? And I'm not going to call some of my hedge fund buddies out by name, clearly, because they're my buddies. What's happening right now? It's like there was a movie named this that I love with Kurt Russell. It's called Escape from New York. My sister runs Duke Capital in New York City, going to the Hamptons. Buddy's in a hedge fund. We're not allowed to fly to Florida. We're driving. You think this is how you contain a virus? The Wall Street Journal yesterday. What a great headline. Where is it? Right here. No, not this one. Well, this is my headline. The worst of the global sell-off hasn't even happened yet. A lot of people have been like, I'm telling you right now, ladies and gentlemen, the panic selling hasn't started. What? Look at that. No, man. This was orderly, to be honest with you. There wasn't panic in here. This was, first of all, we were super overextended. This wasn't panic. My prediction, you're going to see panic selling. It's really, I will never eat at another Cheesecake Factory again in my life. We're just going to stop paying rent. Do you know that there's a landlord or an investor that was on the other side of that, maybe eating cat food, waiting for your check to come in every month? And now they're going to go broke and they're investors. This is a cascade, folks. This was a medical crisis. Now it's slowly morphing into another financial crisis. These mortgage companies, April 1st, you're not even going to be able to call your mortgage company to tell them you're not going to pay it because people are just going to stop. Let me show you the Wall Street Journal headline. I wanted to show you which one is it. Yes, right here. China's progress against coronavirus, which I do not believe, used draconian tactics not deployed in the West. If you were at Top Gun Options in January, before these got shut down off the internet by China's military, I showed you the video of the little guy. I think he's dead. Nobody's seen him ever again. The guy that went around to the 5 Wuhan hospitals, showing them packed with people on top of each other and people like just falling where they are. On the way to the other hospital, he passed a mortuary that was burning people hand over fist. I showed you pictures of the streets torn up around Wuhan. And if you went outside, they threw you in the back of an army truck and you were never seen again. Are we doing any of that? Italy, we're going to be fine. Northern Italy is a war zone. Newt Gingrich, the former Speaker of the House, has been stuck inside for 2 months. In Lombardy, if you go outside, they arrest you and you could get fined $8,000. But we're America. This can never happen here, Wiz. You're full of fear. Ladies and gentlemen, I'm an FA-18 Hornet pilot and an options trader. I plan for the worst, and if the best happens, I'm pleasantly surprised. If you're sitting there planning for the best and the worst happens, you're going to be destroyed and devastated. Think about it. My prediction is on April. Why do you think the president was doing the 15 days? It ended March 31st. It was supposed to. Tuesday night, the president, March 31st, March 31st, March 31st. The next day in the Rose Garden on Fox, he's like, I think we're going to pick Easter. In the blink of an eye, it went from there to 19 days later. I know what the president was briefed back here. I know what the Senate was briefed back here. The same senators who went out and sold their stocks. Senator Burr is a disgrace, and he should have been arrested by now. But there's 2 sets of rules. He wrote an op-ed about how everything's fantastic, COVID's no issue, and we're very prepared, after he went and dumped all his stock. And you know, this is classic. So the guy's in charge of the Senate Intelligence Committee, right? Got this top secret brief or whatever level classification it was, dumps all his stocks. You know what he actually said last week as the reason he dumped his stocks? He saw, here's his quote, not me, Google it. I saw on CNBC a couple, things about how the market could get bad. This is a United States senator, and I sold my stocks because I saw it on CNBC. You can't make this up, ladies and gentlemen. It's stunning. Mark or Long, when you become a member, if you want to, in a couple minutes, you're going to see behind the curtain. I'm not here to peddle fear or anything like that. I'm here to tell you the truth, and you're not getting the truth. Donald Trump, man, I can't. The guy, what a horrible position to be in. I pray for the man. I pray for the president, all of our first responders, the doctors. This is our next 9/11, but it's going to be worse. Our healthcare workers, God bless them. But let me tell you this. You know Donald Trump as well as I do. My sister actually knows him quite well from real estate in New York City. I had dinner with Secretary Mnuchin. My sister and Secretary of the Treasury Mnuchin were partners at Dune Capital. My sister got Woman of the Year for New York City, and at her dinner, here's what I'm getting at. You know Trump as well as I do, because my sister says what you get is that's him. That's not an act. That's him. What am I getting at? Look at the fall, ladies and gentlemen. What was going on in the fall? Donald Trump, 3 years of a Russia hoax, collusion, Democrats. He got impeached. He got acquitted. Donald Trump on cloud nine. Stock market. The guy tweeted about it every other day. Stock market never been at record highs. Unemployment never been at record lows. And oh, by the way, folks, I just got a trade deal done with China. They've been sticking it to us for 50 years. I did it. The guy could not have been higher on cloud nine. We will remember these days, folks. I'm writing a book about this. It's like, that's nostalgic. I don't want to go out of my house right now. Remember 2 months ago? The president of the United States was on cloud nine. He beat China into submission. I want you for president. He beat China into submission. And here's what happened. A couple booger eaters from the CDC, from the Pentagon. Well, let's just say that some people from alphabet agencies went to the National Command Authority and said, ladies, fellas, something happened bad in Wuhan. They have a biological weapons facility. I ain't no tinfoil hat wearing conspiracy theorist, folks. I get information from people who I have and do trust with my life. Literally wore a uniform with them. Senator Tom Cotton, 2 months ago, said the same. This guy should be president. 2 months ago, he said this is a biological weapon that accidentally got out of the level 4. The only level 4 lab in China, folks, is in Wuhan. Mr. President, this thing got out. Look at this. This group, the $20 trillion lawsuit against China. I know it was a biological weapon. But if you're Donald Trump, based on the way you've seen him in public, what would you say to people when you aren't, I just beat Nancy, I just beat President Xi, the stock market's at record highs, unemployment at record lows, and Joe Biden and Bernie Sanders are going to be my God, folks, of course, I would have done the same thing. I would have been like, yeah, okay, thanks for the intelligence update. I'm going to Mar-a-Lago. That happened. And I know he was repeatedly, and our senators were repeatedly like, no, actually it's getting worse, and it's worse. Now it's really worse. It's worse. It's worse. It's worse. When did the president start calling this China virus? 2 weeks ago, and the media's all over him for it. And he still half kind of says China virus, and even the other days like Xi, good guy. What? China owns $1.3 trillion of our debt. We just spent that. I can't believe this guy hasn't, in a press conference, said, hey, Xi, I called you, your number's busy. That $1.3 trillion note you own, you can tear it in half. And I'm sending you an invoice for another trillion. So that's a big rant, Wiz. Well, here's how we trade at Top Gun Options. It's called SOT, Strategic Operational Tactical. In my live trade briefs, Monday through Thursday, I give a strategic brief about what's going on around the world, operationally about the United States, and then we get tactical, and then we trade. We have been pounding the hell out of the Brazilian ETF, the EWZ, for massive profits. Why? It's sad. Brazil's going to implode. Bolsonaro is talking about martial law. I have contacts in Brazil. And it's going to get bad. Bolsonaro's doing the Trump. This thing's a cold, it's a liberal media hoax. And look at this. Gangs in the favelas, in the slums of Rio, are taking over and putting on curfews. because of this disease of the rich. You want to talk about civil unrest? It's in Brazil. It breaks my heart to say it. We're printing money getting bearish on the EWZ. Of course, I went over on time. They went over about 5 minutes. I reserve the right to take this 5 minutes because let me say again, I appreciate all the questions and yays, and you need to run for president. I need to kill too many people. There's too many. Actually, I wouldn't. Based on some of the politicians today, I don't even think I would have to. Now, let me tell you this. Top Gun Options, we do live trade briefs. Let me just go back to my slides real quick. Again, you cannot, weeks ago, we turned off our trials. Why? I'm sitting in the back of a fighter jet in Fairhope, Alabama, doing like a big formation flight a couple weekends ago before the world ended. This guy's like, I'm on like in the back seat at the hold short, getting ready to take off, like answering questions. And this guy's like, oh, thanks for the 20 minutes. It answers a lot. Maybe after my $38 trial, I'll join up. I'm like, dear techies, turn off all the trials and turn off all the monthly memberships. We cannot have way too many people in what we do here at Top Gun Options. So the only you can do right now, the only thing we're opening or have open are quarterly or annual memberships. We do a weekly options brief every Monday at 1 o'clock. We do a primary brief every Tuesday at 10. AR, almost $1 million portfolio since January 1st, is Wednesday. And then we just did our weekly debrief this morning at 10 a.m. Wiz, I work during those times. About 80% of our traders work during those times. We send out text and email alerts whenever we see something that we like. And at the end of the day, or actually after the session, we go ahead and send out the replay. We post the replay. You're also going to get access to our manuals, our primary, intermediate, advanced manual, and our 8 live full throttle training sessions. You got to watch these, man. Do not be trading this market right now. When the market doesn't make sense, that's when I usually push back and say, I'm going to grab some popcorn and get smart. Get on board Top Gun Options and watch the full throttle training. Bury your face in it. Watch the Iron Condor lecture 5 times. This isn't like Brand X, who filmed a Iron Condor lecture 10 years ago on Betamax. These are current. They have everything that's going on right now in the market. Nancy Pelosi. Here's what you get. Access to those 4 live trade briefs, access to the 8 training sessions. You're going to watch them a million times over the next couple weeks. Stuck inside, get smart. Do not trade this market if you don't know what you're doing. Text and email alerts. Here's how you get airborne and max afterburner. These are the only 2 memberships. I've ordered support not even to answer people who are like, I want a monthly. Delete. We're not going to do it. I'm not letting 1,000 people into our live trade briefs. I can't stand it as an instructor because usually when Top Gun Options, before everybody found out about us, I'm answering questions here all day, hanging out, and it's a zoo, and we don't want a zoo. No trials, no monthlies. You can do a quarterly option. It's topgunoptions.com/ and it's, I need to change that URL. That's a little, I'll go get the link. FT-max quarterly or an annual membership. You obviously save on an annual membership. Let me just give you the links here. And get in there, watch today's replay. I just posted what we did this morning. Go watch today, man, because I just, there's a lot going on. And then, so that's the quarterly and that's the max. Please don't ask about a trial or a monthly. We're not doing them. It's just, now you're learning about a market. There's supply and demand. There's just way too much demand, and we have to throttle back what we're doing here. I appreciate all the comments and everything like that. I'm going to teach you how to do this. One more time, folks. The last time I'm going to say this. That was easy money. If you listened to me, if you didn't listen to the president or our senators who lied to you, and you listened to me, who was showing you the real intelligence, we made 52 millionaires. Little old ladies in tennis shoes, literally. This is going to be hard money to make. And guess what? I'm not going to do it. I'm going to watch. And then we have that decision point. I think it's going to be April 1st. I think it's April 1st, folks, when a bunch of people go, I'm just not paying anything. What are you going to do? Throw me in jail? That's where we're going to see an inflection point. Do you have replays, closed captions, or you know what? I'm going to ask about that. A lot of people saying I want you as president. No, thank you. Again, I would not wish that. I've been critical of the president recently about some decisions. We should have locked down this country, but God bless him. God bless the president. God bless, even though I can't stand him, Chuck Schumer and Nancy Pelosi. God bless everybody in power, and that's the key word. They're in power. and some of them are using it to profit and screw you, which is not bad. All right, hopefully, yep, 5 minutes over. That's perfect. So we'll keep you on timeline. Anna, thanks for having me. Hopefully you guys can come see what we're doing here at Top Gun Options, because we are changing lives, okay? Have a great rest of your day. Happy hunting. Make sure you hedge, and God bless. I'll talk to you guys later.